one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
And I was like, and I got really defensive, I was like,
Yeah.
oh no, I never, no, this is investing and blah 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 and all this stuff, I was like all this, you know what I mean? And I was thinking, but she was right, you know what I mean? And that's what can happen when people kind of like try and drag you down and say, hey, like you've been doing this for 4 years, it's not working. Why, why do you keep doing this? Like, don't you want to just try something else? Like, let's go flip some houses or whatever, like it's on TV, everyone's doing it, or whatever. Like, but I don't blame those people when they say that, because I actually think a lot of it comes from our programming. So we've been taught that there's certain things, that like you do this, you get a job, you save your money, you put in an investment, a retirement account, and that, stocks is a sure thing, that's like wild speculation, that currency trading stuff. And so I understand that, like, why people say that. And I don't actually fault people when they try and detract and say that like tell you as a trader, like I don't know if you should be doing this. Because I think it comes from a good place. I just think that in their minds, they're trying to they're trying to help you. They want to pull you out of this, like that. Like my roommate's sister, who said, hey, do you think you ever get addicted to that? That was coming from a good place, you know what I mean? Like, she wanted to help me. And so to me, that's okay. I think the issue though is that it affects you as a trader. So if your wife thinks that you aren't going to be able to pull it off, you get that. Even if she doesn't say it, she doesn't even have to say it. Like, what she thinks about it. You know what I mean? So that's kind of the tricky part. And so I think sometimes what you can do is you can leverage that. You can go, well, what if I understand what you're thinking and I understand where you're coming from. What if I showed you what I'm doing? And we can, and basically you're like, your wife or whoever the person is, your significant person in your life is like the one who's concerned. Maybe you bring them in and show them your plan, right? That forces a couple of things. It forces you to be accountable, right? And to show that you're actually sticking to your system, kind of like a trading accountability partner. And two, it forces you to come up with a plan. Most people don't, most people don't have either. They don't have a plan, and they don't have anyone to be accountable to as a trader. And that's the issue. And so, and so if you can map it out, and when I say a plan, I don't mean like a 12-month plan. I mean like a 5-10 year plan, saying, okay, we're going to do this, and then when this happens, I'm going to do this, and then I'm going to do that. And you want to give, you know what I mean? And so you're kind of like, they're on your team now. And so they can cheer you on, and every week you can say, look, this is, what my strategy is. You see my back testing numbers. This is what happened this week. This is why I think, this is why, you know what I mean? So it's more about empowering that person, instead of what the natural instinct is to brush them off, like I did with that my friend's sister, who was like, are you going to get addicted to that? I just kind of immediately got defensive. So I think you can kind of flip it, and it's better for all parties in that way. But I don't know. I mean, that's the best thing I can come up with, because I know traders that have had that issue, that say, look, my wife doesn't think I'm going to, she's got no faith in me. What do I do? And so the best thing I can think of is to leverage it that way. I mean, I was really lucky because I was single when I was trying to figure out trading. So I didn't really have anyone to, you know what I mean? Like, I didn't really have anyone to just friends and stuff. And they were all, I had a friend who was actually really good at it. So that kind of gave me hope and stuff. So so I don't know. I mean, it's a tricky thing. I mean, have you run into that in the past?
No, I've been pretty lucky also. Like, I haven't had to deal with that so much. And if I did, it was like online stuff, right? So you can just kind of ignore them or whatever. But but I think it stings also a lot sometimes, because there's an ounce of truth in there, right? Like, this might be addictive. So, you might, so you think about it and you're like, oh, maybe I shouldn't be doing this. But then, I think you're right. At the end of the day, I came to that conclusion also. Either you bring them in, or you don't talk about it around them. And then just, because you're hanging out with that person for a reason. So go hang out with them for another reason, and just don't bring the trading into the relationship, right? So
yeah, that's a great point. It's, it's funny how people who are close to you feel like that, they have a license to give you advice. Like, it's one thing to ask, right? You can ask, but you can also, you can ask and say, I know people, and I'm not, people that have gone and sunk a lot of money into mortgages, and done things that I thought, like just looking at the charts, just looking at the housing charts is a bad idea. But I never ever say, hey man, are you sure you're not over leveraged on that? Or are you worried about like the fact that like money is free now and everyone's got a lot of money? Like, do you not think that there's like an everything bubble like going on here? So I don't say that. And if I'm asked, I will tell, but I don't want to like be that guy. You know what I mean?
Yeah. No, same here. Yeah. I used to do that a lot when I was younger. I'm like, and then when I got the other end of that, I'm like, okay, not so cool. So yeah, stop doing that. Right?
Yeah. I think that's safe. Yeah.
Okay, cool. Thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Right now I have a bunch of trades on, right? And one of them doesn't look good. It looks like it's probably going to get stopped out. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, so I'd be interested to find out what goes through your mind as soon as you lose a trade.
Well, that's a good question, right? Like, other than the usual, damn. I think my perspective's changed over the years, I suppose. Like, I read once a trader who wrote something that I respect this trader, but I totally disagree. And he said that every time you have a losing trade, I truly believe the markets are trying to tell you something. Like, there's a lesson there. I can see that angle. Like, I can see where you would say that, but I disagree. I don't think so. I think, like, it's like, if you think about it, like genetics, like it's kind of like genetics. Like, some of your genetics, you're probably happy about, like the hand you were dealt with, the dice that came out in terms of your DNA. And then some of them you're probably not so happy with. And I think of the same with trading systems. So the number one thing I want to make sure of when I have a losing trade is that I did the right thing. By taking the signal. You know what I mean? And obviously, I don't have this problem anymore. I used to have the problem of moving my stops. So I ended up with a different trade. So I had a trade where I was risking 2%, for example. And then because it got so close to my stop, I'd move my stop. And then I ended up risking 3, 4, 5% on the trade because I wanted to be right. So I don't do that anymore. And then I kind of swung the other way where, as soon as the trade kind of went against me, like 50, 60, 70%, I would bail out of those. And I found out that my testing had shown that it's actually more profitable to let it ride. So that's kind of how I trade now, is I let it ride. But the number one thing I want to make sure of when I have a losing trade is that I didn't fail in the execution. That's really it. Because that still can happen, right? Like, you get in late, or you take a signal that's not really that good, or, those sorts of things. I'm sure you've had experience with those as well.
Yeah. I mean, that's the number one thing I look for. Like, I go to the journal it, take a look at the before and after screenshot. 9 times out of 10, it's going to either be like a 1 or, like it was a poor trade, a poor entry, or it's going to be a 4, like an excellent entry. So even if I have a losing week and I have like 2 or 3 1s there, I'm like, I'm okay, because those are just poor trades, so I can improve on something. But if I'm losing and they're all 4s, then there's something to look at, right?
That's right. I mean, I think you've nailed it. That's where I think the major gains are made in trading, is by just keeping your eye on the ball, which is execution. I really do believe that.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
The other thing I wanted to say was, like, for right now, I have a bunch of trades on, right? And one of them doesn't look good. It looks like it's probably going to get stopped out, okay? And I think I have 5 on right now. So I was looking at this morning, actually, thinking about, like, what did I and like all the other ones look fine. It's just this one, you know.
Yeah.
And people would probably call them correlated too. Like people would say, why are you selling the Aussie Swiss and the New Zealand Swiss and the Aussie dollar and the Kiwi dollar? Well, actually, it's not, obviously, because one of them's probably going to get stopped out. Maybe it already has stopped out while we're sitting here, and the other ones don't look like they're really going to get stopped out. So you know what I mean? Like I always consider them to be independent, and so as long as my execution is right, I feel like I'm doing the right thing, and I don't necessarily think that like I missed out on a lesson. Like I didn't see something that the market was trying to show me. I think that's the road to over optimization, and I think that's dangerous. So
yeah. When I first started, also that's a good point. Like I would think that every losing trade had a problem, so I would like beat myself up over the losing trades. And if I didn't really look at it closely, but if I went back to it, probably 50-60% of them were good trades, but I was just beating myself up over a loss, and it was, you know, I wasn't there to learn anything. It's just a losing trade.
Yeah, and that's because when we first start out, I believe when we first start out, our self-esteem, like our trader self-esteem, comes from our win rate, right? And what I'm trying to say is I'm trying to shift that to execution. I want my self-esteem, my trader self-esteem, my confidence to come from how far am I straying from the optimal execution point, you know? And so that's a different focus, right? And if you look at the free forums, like all the free factory forums, people they're always like, it's almost always about win rate, you know? And it's everything is about, this is a high win rate, this is a great system. It's like, you know, they're not really, in my estimation, they're not really zooming in on the thing that's going to help them the most. I think if you stick with it long enough, you'll get it, but it's just a bit tricky in the beginning.
Yeah, for sure. Cool. All right, thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
I don't really do any trading early in the morning. It's more about just babysitting the charts, making sure that, you know, everything's going well. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, I'd be interested to hear about your morning routine if you have one.
Sure, yeah. So what I like to do in the morning is first I will wake up and I will go and see if the kids are living. And they're not beating up on each other or anything like that. As we're recording this, we're in Australia, we're kind of like on lockdown or whatever, like most places in the world. Yeah, so just making sure that they're all right, that they're fed and they're happy and stuff. Then what I'll typically do is I'll go and look at my charts. So where I live in Australia, the daily candles, the 5 p.m. New York time daily candles, they kind of shift over in the morning. Depends on the time of year. Sometimes it's 9 a.m., like in the summers down here, which is the winters in the northern hemisphere. And right now, which we're going into winter, it's autumn now in Australia. So it's actually earlier at 7 a.m. So all I really want to do when I check the charts is I want to make sure that nothing crazy happened. So I'll check the charts, make sure that nothing crazy happened. So there's two ways to look at it. So in the morning, if I have a trade, I will check the trades, right?
Yeah.
If I don't have a trade, I will scan the markets that are on my watch list, and I have like a method of highlighting those pairs, and I will see how they're looking, right? And that's basically it. And later on in the day, what I'll do is I listen to my hypnosis and I listen to my brainwave entrainment. And I will usually do that if I'm doing any sort of back testing or if I'm actually entering my orders. I usually enter my orders. So the Asian session, I'll be 9 a.m., 8 a.m., around there, London time. And again, that shifts depending on the time of year. But that's when I will kind of like do my, quote, trading routine where I put my brainwave entrainment on. Sometime during the day, I try to find 25 minutes to do my hypnosis. If I'm back testing, I definitely do brainwave entrainment before doing my back testing. So that's more of my routine for back testing. I feel like traders need to be really careful and vigilant with their back testing. So I try and treat it as much like a trade taking process as my normal. So I don't really do any trading early in the morning. It's more about just babysitting the charts, making sure that, you know, everything's going well. Like if I have my trailing exits activated, just making sure that the virtual private server, the VPS, are actually like on, because sometimes they'll reset and you have to turn on your MetaTrader and all that all over again, like just to make sure that it's on. But that's basically it. I don't really do any trading early in the morning. I do more just checking, and then it's for me where I live, because I want my trades to get kicked in during London or New York. It's actually kind of later in the day where I do my major trade, which is basically when the kids are having dinner. So it's really, it works out well. I can kind of duck off and go and do my stuff. Yeah.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
What about you? What's your method?
For me, it's get up in the morning, take a shower. I do the cold shower thing. After that, do a little meditation, and then check the charts. For me, it's a little bit different because you're just coming out of New York in the morning for us. Yes, same thing. It's more like, do I move my stops to break even if something hit? Is the EA or the management working right? Stuff like that. And then kind of go along with my day. And then towards like at night, then look at trades and look for potential like setups and stuff like that. So
yeah. I often think, like, if I lived in the States, it's so hard. Like the West Coast is such a hard time zone because
I think it's the toughest one.
It really is. Like I can't get around it. Like I would almost want to live in the Virgin Islands or like the Eastern. I used to live close to the easternmost point, or I would get up early. See, the thing is, I really like getting kicked in during London, though. That's the thing. Like, so really, you have a couple of choices if you live on the West Coast. If you live on the East Coast, you can just get up early, and you're probably going to be okay. Like, get up at 5 a.m., 4:35 a.m., just kind of live on that kind of schedule, and you'll probably be fine. Yeah. But if on the West Coast, I almost think this is what I ended up doing when I lived on the West Coast of the U.S. is I would just kind of stay up late as I could to put my orders in around midnight, 1 a.m., and then go to sleep then. You know what I'm saying?
Yeah.
So that's how I do it. So if you're trading the daily charts, it's pretty, like, I just don't want to be triggered during Asia. That's the biggest thing I'm worried about. So I try and wait as long as I can through Asia. But I mean, it's what you want. It depends on what you want to do, I guess.
Yeah, what you make of it, right? Yeah.
Exactly. Yeah, and your style too. Like, for example, look, if I were a reversion to the mean trader, I like to trade a lot of breakouts and trends. But if I was more of a reversion to the mean trader, I would actually probably just trade and so I was trading lower time frames. So I would probably just trade like New York Open, or I would trade like Asian session even, or Fridays, when you get like a Friday retracement, which is pretty consistent. Like that's what I would probably do. That would be, in some ways that would be easier. Like if that was my bread and butter, reversion of the mean, I could actually, because the good news about that is they happen so like predictable. Like, a lot of times when New York comes in, it's going to revert, or when London comes in, it's going to revert, or when New York closes, it's going to revert. Like there's this typical times where Fridays, end of the week, it's going to revert. Like it's really Asia, almost always, not always, but a lot of times it's going to kind of drift one way and revert. So in some ways that's kind of I wish I had that mindset where I wanted to trade that way, because it's kind of like it's good if you're time poor. Like you can set aside certain blocks and go, okay, well, this is when it should happen, right?
Yeah. That's true. Yeah, I do the same thing. I stay up till like 1 or 2 and then put the trades in. But even Hawaii was better.
Yeah, even Hawaii. Exactly. Even Hawaii is better. Yeah. I actually think if I had to choose, I would say the best time zone would be like Thailand, Indonesia over there, because what happens is London, it starts kind of in the afternoon there, like, 3 p.m. or 2 p.m. Like that's pretty cool because you can see London open, and then later on the evening you can see New York open. It's just like that would be the best. Yeah, that would be the best. Like Thailand, Indonesia, right around there. You could live in Bali, get a big fat house for like nothing.
Yeah, exactly.
Yeah.
All right, cool. Well, thanks for sharing.
Thanks.
All right. All information in this podcast is for educational and informational purposes only and is not trading or investment advice. I recently stopped watching Netflix. I realized the programming was a lot of gloom and doom and end of the world kind of stuff.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. All right, Walter, let's talk a little bit about the media and that effect it can have on your mindset.
So for me, the biggest thing about the media is that the guys that you listen to on those business channels who talk about the markets and stuff, at least half of them are wrong.
Yeah. The other
And
half
sometimes,
right.
yeah, and sometimes more than half. Like,
Yeah,
you have situations like, especially where there's a roaring bubble or something. It's really hard to find the dissenters. Like, they're very few, and sometimes they don't get any airplay. Peter Schiff comes to mind. So people who follow Peter Schiff would know. He was one of the lone voices, in 2006, 2007, saying that the housing market was going to crash in the U.S. And he was literally laughed off the TV. Like, all the other guests thought you were an idiot. Like, literally. And he ended up being right, of course. And so, I think it's easy to read newspapers or like The Economist or, whatever, Sky News or CNBC in the States or whatever it is in your country. Like, it's easy to kind of get locked into that. And I think that's a mistake. Even, FX Street is interesting because at least at FX Street, they have multiple points of view. Like, in other words, like fundamental points of view and technical points of view, which is I think really good. Usually when you're looking at the TV, you're only going to get the fundamental point of view. Yeah. And that's why when I talk to people about trading that don't know anything about it, they often go, wow, how do you keep on track of all the world events and stuff like that? Like, they always talk about that because they assume that's what it is.
Yeah.
And that isn't really necessarily the case for a lot of retail traders who are technical, like I am and you are, So, so I think the problem with that is the social proof. Like, you get into following that cognitive bias called social proof, and you guys can look that up. But essentially, following what everyone else does. Yeah. And I think that's the issue with the media. For me, like, that's the biggest one, is that you can kind of get sucked into that mindset. Well, if everyone says the euro's going up on TV, it's going up, right? Like, there's all these reasons why, or it has to go up, or oil has to go up. It's almost at zero or whatever. Yeah. So.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode. Yeah. I guess I can't fault a lot of traders for doing that, because when you're starting out, you kind of need that frame of reference, right? Something to look at. But yeah, it definitely can affect. And you never know what the agendas are behind some of those tips or whatever, right? So
yeah, that's a good point. Like, in Australia, the number one advertiser in Australia in all the papers, all the newspapers and stuff, it's the real estate market. So the local newspapers, they're reticent to talk about anything in terms of like a bubble or anything like that, because that's their livelihood, right? They literally make their money. Like, if it weren't for real estate agents advertising, I don't see how they would exist. Like, it's just crazy. So these newspapers, you have to keep that in mind. Like, where are they getting their money from? And same thing. Like, every time you see someone on CNBC or whatever on those business channels, a lot of times they're fund managers, right? And that's why I think they're supposed to disclose, right? They're supposed to disclose, like, oh, I don't hold any positions of United Airlines or or whatever. Yeah, because they know that they can kind of sway opinion, which is crazy when you think about it. Like, these they can sway opinion just by a 15-minute presentation on TV and a quick little 5-question interview, and like all of a sudden that changes, the demand for a stock or something like that. So it's
that is crazy.
It's pretty crazy, really. Yeah.
Maybe we can take it one step further. Also, like, I recently stopped watching Netflix. I realized the programming was a lot of gloom and doom and end of the world kind of stuff. So what do you think about that? Like, just the overall general media.
Yeah, it's so funny you say that. I have a friend from high school, and she's like an exec at Netflix, and she posted something on her Facebook, and I'm like, dude, what is that? Like, what and she's like, oh, she was at Nickelodeon, and then she jumped ship to Netflix, and she's like, oh, that's like a show on Nickelodeon. I'm like, oh, like it was the character, like a cartoon character or something. I'm like, but someone drew it on the ground or something, or like in concrete or something, like wet concrete or something. I'm like, dude, what is that? It looks like a dead horse or something. And she's like, no, that's like a cartoon that I worked on at Nickelodeon before I went to Netflix. And it's interesting because I think if you follow the money and see where, like, who owns what, it's really interesting to see. Like, there's some really good books on this. Maybe we can post them in the show notes. But some really good book. Yeah, they're really, really good books on which corporations own which. It's a kind of a giant shell game, and you can kind of see like what the agenda is. Like, what would happen if you become fearful of a certain thing? What are people likely to do? What are they likely to buy? What are they likely to seek? All those sorts of things. And we know, for example, like if you blast a headline on the internet or on a newspaper that says something really great, like, oh, amazing, girl who lost legs can walk again with bionic legs, right? You put that on there versus, girl dies in a tragic car accident last night and her family's so sad. Like, you know what I mean? They know which one is going to get more eyeballs on it. They know that it's the gloom and doom, right? And it's so interesting. Like, the people that I know who don't spend a lot of time, and I don't watch TV, I would say though that it's hard, even when you're on the internet a lot, it's hard to kind of switch off that news sometimes because it kind of comes into your face. Like, they make it really easy. So yeah, that's difficult. But the people I know who don't spend a lot of time watching TV, like, they seem happier. You know what I mean? Like, it's obvious.
I noticed that too. Like, I'd stop watching for a week and then I'd watch for a week, and then I was noticeably like a little bit, not depressed, but just like not as happy.
Yeah, it's so weird. It's like they need it. They need that fear to make you pay attention. Like, fear makes you pay attention more than I think that's kind of how we're wired. I don't fault them because that they do that, because if you think about it, like, when do you really want to get healthy? Well, when you have a health scare, right? Like, people don't walk around going, oh, I don't want to get fat. I don't want to get fat. I don't want to get fat. Or I don't want to get heart disease. I don't want to get heart disease. I don't want to get heart disease. What happens is they get a scare and the doctor says, dude, you got to lose 20 pounds or something happens to your heart or whatever. And then you're like, holy crap, I need to get healthy. Like, it's always you know what I mean? Like, your doctor gets paid when you're sick, right? The doctor doesn't get paid when you're healthy, sort of thing. So yeah, I think that's kind of how we're wired. We just think that things are going to keep going the way they are until something scares us, and that kind of shocks us out of our sleep, and we go, whoa, what's going on here? We have to pay attention to that. And I think it's kind of inbuilt the way the way we're wired.
Yeah, that's true. And that's what sells. So, that's what keeps them in business or whatever. So I get that too. Yeah. All right, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Holy crap, this guy made $7,000 yesterday, before he ate breakfast. and the reason why he did is because it's all demo. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, today we could talk about performance envy.
Performance envy.
Like, you look at all these traders that are supposedly successful or whatever on Instagram, or like you see some actual results or whatever, and you get envious and you're kind of trying to catch up or whatever. So what are your thoughts on that?
Yeah, that's a really good point. There are two things I would say about that. Number one, do you know the old, you've probably heard of this, but it's the old, what they used to do for like stock tip newsletters. There was a trick that they would run to get subscribers. Have you heard of this? It's
No.
like where they send. So what they do, and this they can do this online too, and I'll talk about that. But basically, what they used to do, and the reason why I'm thinking of this, because my friend just asked me this question this week. He's getting into trading, and he's like, "Man, these guys are new. They just started trading last month, and they're already making this amount and all that." And he's like, "What's going on here?" And I said, "Well, you got to know the old stock tip newsletter hack." So what they would do is they get these mailing lists, right? And they would send out free stock tips, buy Apple, buy Google, whatever. But half of them would get a buy recommendation, half will go to sell. And then the ones that did well, they would keep sending them, and they would split it buy and sell. So basically what happened is that after a few months, they would have a certain fraction of their mailing list that had like unbelievable, like 100%, you know what I mean? Like everyone, they couldn't go wrong. So then they signed up for the paid subscription. And that's what people do online too. So here's a couple of tips. So when you look at these guys like on Instagram or Facebook or whatever, and to a degree also on YouTube, what you'll see is like these guys posting these outrageous, screenshots, right? And so what a couple of things to look for are, I think in MetaTrader, if it's a demo account, I think the order number starts with a 1. So if you see that, right away, that's bullshit, right? Okay, and the other one is like you'll get these guys that are doing like 100-lot trades. Okay, if you have a 100-lot trade and there's no slippage, like it's bang on hitting your 9-pip profit target or whatever they're going for, then it's also like that's not real, right? That's a demo account. So it's only on a demo account that you don't get the slippage, because 100 lots is about as much as you can do in retail forex. It's really hard to get those through, you know what I mean? So you can go current X and stuff like that. You can step it up, but really, if you're looking at these, especially on Instagram, like they're famous for it, right? And Facebook, you'll see these guys and they're posting their screenshots like, holy crap, this guy made $7,000 yesterday, before he ate breakfast. and the reason why he did is because it's all demo. And they can do the same thing that I was talking about, the stock tip newsletter thing. What they do is they have multiple demo accounts. Buying the euro, selling the euro, and they just keep doing that, and then eventually they'll have like a demo account that's like unbelievable, right? Because they just keep and so that's the same thing. So you just have to be wary of that, I think. And I mean, it's like finding a friend, right? Like if you're trying to find a friend, there's certain things that you like in them, and I think that's the same thing with your trading mentor. Like there's certain people that you kind of jive with, and you're like, I get where this person's coming from. It makes sense. This is what I need to work on, right? I mean, that's what it is. It's not. I mean, I'm not here to bag against other mentors. There's some really great mentors out there. They just have different approaches, and they have different personalities, and they structure their lessons in a different way. So it's really more about you finding a good match based on that, rather than looking for the guy with the best demo account on the internet. You know what I mean? Like that's not going to help you, right? So that's my thought anyway.
I mean, it's actually really easy to just also cherry pick only the winning trades, right?
Of course,
So that's what I see a lot in the accounts. Like, oh, this guy's winning every week, but he has no losers. What the heck? So
it's so funny, man.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
And as far as the jealousy part of it, I guess, which is the other thing you're talking about, I think that comes with a lot of self-reflection, like knowing who you are. Like it's easy for me. For example, I've had a bunch of losing trades in a row the last couple of weeks. Although yesterday I got one that looks like it's going to work out, which is great. It's great to get back on the horse and all that. But, it's easy sometimes when your confidence is low, when you're in a losing streak, to think things like, oh, man, if I was just trading, the 1-hour chart instead of the daily chart, I would have been able to get in and out, and and those sorts of things come up, especially when your confidence is low. So I think for me, it's really more about knowing who you are as a trader and locking into that rather than trying to be someone else. And so, you really want to early on define, okay, look, I've got a job. I'm home at 7:30 p.m. So that means I'll check the charts, at 9, from 9 to 10, I'll check the charts. I'll put my orders in. The next morning at 5:30, when I get up in the morning, I'll check my trades, maybe move to break even or whatever I need to do to manage them. You kind of have to set your life around that, or you're like, oh, I'm retired. I'm 65. I've got all this time. Maybe I will trade the New York Open, and maybe I will get up early in the morning and just, you know what I mean? So it's really more about, knowing yourself, knowing what kind of lifestyle you want to have as a trader, because it's hard to trade the lower time frame charts. Like it's hard. It's not only is it addictive and that affects your brain, but also it's hard to like maintain that much focus for that long. It's like being a pro athlete, literally. Like you have to be so on it all the time. That's why a lot of those people who trade the lower time frames, they take big breaks. They take breaks during the day. They take breaks during the year. They take a lot of time off where they just unplug because they realize the importance of being really on it on their game when you're executing. Execution becomes so critical when you're trading those in and out trades, those scalping type trades that everyone thinks are so sexy.
Yeah. And I think they also limit themselves, right, to like 1 or 2 hours a day sometimes.
Yeah, absolutely.
Yeah. Also, I think trading seems deceptively easy. Like people think, oh yeah, you just learn the system and then you just make all this money. But then in reality, it's not that simple. And then you beat yourself up about, oh, I can't make the system work. And then you go down that rabbit hole, right?
Yeah, you're right. You're absolutely right. That is the biggest misconception of trading, I think, is what you nailed it, is in the beginning, it's about the system. Mm-hmm. It's not. It's about you. Like, it's about you and how you execute the system. So that's why, for example, you'll go on the Free Factory forums and you'll find people saying, someone gets on there and says, this system works brilliant. I've been making lots of money, blah, blah, blah. Here it is. Hey guys, do you want to make it into an EA or or improve it or something? They usually say, I want to improve it, or I want to, automate it because I hate sitting around the chart, looking at the charts all day. That's usually how it starts. And then other people get on there and they'll look through it. They'll test it out. They might even trade it live. And they'll go, dude, this sucks. It doesn't work. Mm-hmm. Okay, why is that? You know what I mean? Like, why? How can we both have the same thing and not in that? And that's the same reason why you can't go by the trader that has the best track record and say, that's what I want to do. Because they might not trade in a way that makes sense to you, and you might not have enough time to trade the way they do or whatever. Or maybe they're trading the London Open and you're sleeping during the London Open, or what, you know what I mean? So it really comes down to, you are the system. Yeah. And so, as you know, a lot of work you do is going to be on making sure that you follow the rules, that you are in a good mindset, that you are in a situation where the easiest path for you to follow is to actually follow the rules of the strategy. Like that's what you want. You don't want it to be where a different path is easier. Yeah.
And like you say, I think it really comes down to knowing yourself and taking control of the situation. A lot of times I think too many traders try to pass the buck onto the system or the mentor or the trading buddy or whatever. But if you take responsibility, then that's when things start to change, right?
Yeah. It's not the broker's fault. Exactly. It's not your mentor's fault.
They're not
it's not the system's fault. Yeah, exactly. Yeah,
all right,
that's
cool.
right.
Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Yeah, and it also helps you cut out what you don't want to do in your life.
Yeah, that's true too.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. All right, so I know I've done this before, and I don't know if you have, but sometimes you tell somebody, just snap out of it. As we both know, it's not that easy. So, or there's some other steps you can do or help somebody with to get them out of a situation or a mental block or whatever, instead of just saying snap out of it.
I think that's a good point. One of our friends that I've worked with, her name's Nicola, and she's a great trader. She was saying she went through the trading psychology course that I created, and she was saying that her turning point was that. She's like, I remember, in one of your videos, you were saying you just need to take responsibility. You know what I mean? Which is basically what you're saying. And that's really it. And so there's a couple of different ways to do that. Like, you can, if you're journaling and you have a list of your trades, like, you can literally pinpoint what went wrong on each trade. And we're not talking about losing trades here. So if your answer is anything but it was bad luck, it was bad luck, it was bad luck, it was just a loser. If there's anything other than that, then that means that you're there's something else that's impacting your trading, right? It's not the random sequence of winners and losers. So, and another way you can do that is, so you can look in your journal and find it, right? You go, okay, well, I keep doing this. I keep missing the trades. I'm always an hour late, so I'm getting in late. My stop loss is too far. I'm risking too much, and that's affecting my reward risk ratio, for example, or something like that. Or every time I have a signal at this time, I miss it because I'm on my way home from work. Or every time I have a signal after 4 losing trades, I don't take it because I'm worried it's going to be another loss, for example.
Yeah.
Those sorts of things, whatever can creep up. That's one way to see it, is in your journal if you're journaling. But another thing is to ask why. It's called like the 3 whys. I don't know if you've heard this. So what you do is you go, the reason why I'm trading is, or the reason why I'm having trading challenges is blank, whatever it is. So you write it down. Okay. But why does that happen? Right? So for example, like the reason why I'm is because I'm getting in my trades late. Okay. All right. Well, why are you getting in your trades late? Well, I'm getting in my trades late because I'm on my way home from work, and that's when the 4-hour candle prints, and I can't do it because I'm on the train or whatever, and I don't have phone reception, or I'm on the BART or whatever. You know what I mean? Like, I can't do it. And so by the time I get home, it's too late.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Okay, well, why is that happening? Oh, well, the reason why I'm on the train when I'm going home is because that's how I always go home. Could you do something else? Well, yeah. Could you wait until the 4-hour candle prints and then maybe take a look on your phone? You know what I mean? Could you open up your laptop and check your charts in the BART station or outside of it in a cafe or something before you get on BART and just get on a later? Like, there's always a, you know what I mean? Like, there's always a solution. It's just difficult when we put these barriers up and we say this is why, but it's usually not why. There's always something behind that. You can dig deeper and figure out the real reason why is because, well, I want to get home early and I only want to get on the 6:20 train. I don't want to get on the 6:45 train. Like, that's the real reason why, you know what I mean?
Yeah.
So you could, there's lots of different ways to do this, I think, to kind of dig into, what's going on and what, because it's so easy to say, oh, it's just, I keep missing these trades, or, oh, my broker keeps slipping me, or, oh, the markets are too volatile now. Well, why are they volatile now? So you can use the 3 whys, and then you can do 4 or 5, 6, however long it takes you to dig to the real reason. And then also in your journaling, you should be able to throw your trades into a bucket. All your losing trades should go into one of 2 buckets, either bad luck or I screwed up. I mean, that's it. There's only 2 buckets, really. Yeah.
Yeah. No, I agree for sure. And I think once you start asking those whys, it really comes down to much deeper reasons, right? Like, I don't have self-confidence, or I don't know what else there could be, like, I don't think this is actually going to work, or whatever, right?
Yeah, that's it. That's totally it. Yeah.
It's kind of surprising once you start asking those questions, what comes up. Like, you might not expect it, but especially like with your dream analysis thing that you use, right? I was surprised you came up on that one too. So I don't know if you want to talk about that a little bit.
Yeah. I mean, it's in the course, but you could you get what you trade for course. But basically, what you're doing is you're trying to figure out what the themes are, right? And you'll notice recurring themes in your dreams. You will notice a couple of really important memories that you remember from when you were a kid, right? And those things. What you're looking for are patterns. And if you want to ask the 3 whys question in a really good state of mind, try to do it right as you wake up or right as you're going to sleep. Really, it's almost better right as you're waking up, because or after you meditate, right? So you want to be in that really calm state of mind where things, you let them bubble up, like you're not repressing them, you're not pulling them down. So like the first thing you think about right when you wake up, just why is this happening or whatever, or it's probably going to be easier to get into like a hypnotic or a meditative state and do it. But that's really powerful too, is to be in that state and then trying to dig into it and figure out what's going on. That's really a good technique for people who want to get into that. Or look at your dream themes, or look at the biggest things you remember, like your biggest childhood memories. And why do you remember those? And what does that say about you? What does that say about, can that relate to any patterns, in your life? Those sorts of things. Yeah.
And how do you feel about that? Those events?
Exactly. How does it make you feel? That's right. Yeah.
And I personally found also just kind of building the habit of whatever you're doing during the day, ask yourself, how do I feel about this? And I found that can help you find some patterns also.
Yeah, and it also helps you cut out what you don't want to do in your life.
Yeah, that's true too.
I don't want to be answering these emails or whatever, you know what I mean? Like,
somebody else do it.
Yeah.
Okay, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only, and is not trading or investment advice.
And then once they get that, then they can become, like a star tennis player or whatever, like, expert on AI. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, what do you think your psychological edge is? I know we always talk about like trading systems and having a trading system edge, but what about a psychological edge? What do you think yours is?
Yeah, that's a good question. So the way I look at it is that a lot of traders, especially the ones that are kind of new to the markets, those are kind of like the easy ones to take money from, because this isn't really kind of an area for them in a lot of cases, I guess. Mm-hmm. And so my edge really is that I realize that this is where I need to focus on. You know what I mean?
Yeah.
So that means doing whatever I can to be, there's two parts: aware of what's going on psychologically, and then to improve my psychology, right? And so there's lots of different tools for that, and lots of methods for both, really. So if you want to become aware, there's journaling, there's meditation, there's just like becoming more mindful. I know that's kind of like a buzzword nowadays, but that kind of thing. And that's a little bit easier, I think, for introverts, because introverts are, which I classify myself as, because introverts kind of, we think more about, like, we like time alone and kind of decompress, and we think more about what's going on. Yeah. So I think being aware of it and then having the, like, a plan to improve, those are the two things I think that everyone needs to be, because if you don't have awareness, then, like, you know, you've got nothing, right? So that's how I see it. What about you? What's your take on that?
Yeah, I think the biggest gains have come from awareness, basically, and just trying to pinpoint what the issues are, and then finding out the true reason behind those issues, or the true cause of those issues, and not saying, oh, this is just, you know, I'm just revenge trading. Okay, so why are you revenge trading? Are you mad at your mom from when she was, like, you know, yelling at you when you're a kid or something, right? So just digging into that, I think, really gave me that awareness. And I think for me, at least, awareness is the number one thing also. Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, that's so true, man. Yeah, like, you just really need to start at awareness. You know, it's like a kid, you know, when they're growing up, they first got to get their motor development down. Like, if they can't, you know, use their voice and walk and use their legs and their hands and their fingers, like, they got to get that first. And then once they get that, then they can become, you know, like a star tennis player or whatever, like, you know, expert on AI. Yeah, exactly. Yeah. And so that's it. Yeah. So yeah, I'm totally down with that. Like, for most people, like, journaling is going to be the easiest thing, but I think you have to be careful, because journaling is, you know, people think, like, and I thought I did this when I first started doing my journals. All I really did was I would take a screenshot of my trade. I actually found my old journals from like 2004 or something. No, 2005, 2006. Yeah. And so all I did was I took a screenshot of my trades, I printed them out, and then I wrote kind of like what the trade was, like what system, why I took it. And you know what I mean? So I had a before and after shot of all my trades, and that was cool. But that's not really what we're talking about, right? Like, we're talking about, what do you think, you know, or what? And so it's more of almost kind of like a diary of your trading development. And that's really good. And I have those too. But yeah, that's kind of the key, I think, is for awareness, is to dig into that. And it's so much better if you write it than type it. And I know everyone wants to, and some people, maybe it makes sense to speak it, you know, and there's enough text, you know, voice to text things software out there that can do that for you. But, you know, it's really tricky to do it right, because it's so easy to, like, say you have a trading journal, but that might be just kind of like a trades journal, you know what I mean? Not a trading journal. So there's a difference.
Yeah, it's interesting you mentioned that, because I've been going over mine right here, and it's just kind of like a little notebook that I check off. Okay, these are the trades I took. This was the result. From there, then I put it into a digital journal. But I found that, like, just marking it off like this really helps me, at least during my trading.
Yeah, and it activates a different area of your brain, and you'll remember it better and all that. Yeah, it's so easy to get sucked into the you know, the fancy online tools and stuff. And there are great trading journals out there, but I think that's the way to do it for sure. Yeah,
I think part of it is also discouraging, right? Like, when these journals are too complicated complicated and you have to fill like too many forms. I was like, screw that. And you just stop doing it. So, all right, cool. Thanks, Walter.
Yeah. Thank you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice. Last month, I heard about this guy who like some crazy returns in his trading, and his secret is basically mushrooms. So like, I don't know how sustainable that is, but trading on mushrooms.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, how do you tell the difference between your knowledge or your skills at work and your ego telling you what to do?
That's pretty good, isn't it? For me, that would be execution. So like, ego's tricky, isn't it? Because I think as traders, that becomes one of the biggest challenges the better you get. And if you've ever seen this among other traders, like who've been around for a long time, you will see the ego creep up. And I think it's interesting because I think as we develop as traders, a lot of things kind of, get easier, I guess, so to speak, in some ways, with experience. Yeah. That's the one thing I think that's not. The way that you phrased it was, how do you know if it's ego or what was the other thing?
Yeah, when you're making a trading decision, how do you know if that decision is coming from a place of knowledge and skill or of your ego trying to take over and run the show?
Yeah. So for me, it always comes back to execution. So I need to answer this question. In this part of the trade, whatever part it is, it could be the risk management, the pyramiding, the entry, the exit, whatever. In this part of the trade, did I do what I am meant to do, right? And if I didn't, and you even see this in traders like George Soros was famous for it in his interview in the Market Wizards or New Market Wizards or whichever book he was in. A lot of traders, like if you go to the traders who speak and stuff, those things, you'll see it. You'll definitely see it where these guys get up there and they say things. And it's funny because then they get sucked in this trap where it's like, you must do this. Like, this is the only way you can, you know what I mean?
Yeah,
make
totally.
money in the markets. And I understand why they say that because that's their experience. And like, they're like, well, man, I mean, look, I look what I've done,
Yeah.
I get that, but that's tricky. I think that's a big trap. The longer you trade, obviously a lot of people are going to fall by the wayside because they quit, but the longer you trade, which means obviously you're making money, the more ego can seep in and convince you that you should break your rules in this instance, or you should do something different in this instance, or that you are responsible for your results and not your system.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Really, because it's kind of like you're a bus driver. You're just driving the bus. Like, you can drive a VW bus or you can drive a Mercedes bus. Don't matter. Like, you got to drive the bus and not wreck it, And so that, to me, boy, man, like, if you can't, that is a really good question, because trying to disengage those two things is, it's a common one, I think. I really do. And I think if you go, like, you guys can go out and look on the internet and see, like, do you hear any traders saying, like, really kind of beating their chest and saying, this is the only way you should do that. You should always do this. You should always do that.
Pretty common,
a lot of times, they're not saying that because, they're trying to lead you astray, but they're saying that because they're coming from their experience, So, I mean, I can't speak to their motivations, but I shouldn't say that. But I think in a lot of cases, they're actually well-intentioned. It's just sort of like, that's all they know. You know what I mean?
Yeah, and that's all they can prove also. Like, in terms of a track record, that's what they can prove, right? So that's what they're going to talk about. So it makes sense from that standpoint.
Yeah, and that's why I think, just reading those Market Wizards books is so good. Like, that was the real eye-opener to me. The big lesson from those Market Wizards books by Jack Schwager was that, like, there's so many different ways. Like, you come across all of these interviews and you just realize, man, like, this guy did that and that guy did the opposite and they both made money. Like, what the, like, you know what I mean? Like, it's really kind of it'll snap you out of the idea of finding the holy grail or the perfect strategy, because you're like, dude, all these guys did totally different things. You know what I mean? And look what happened. Like, it's crazy. So I really like how that, that can help you see trading for what it is, which is really it's a personal journey to match up what you should be aligned with, like what makes sense to you. Yeah. So.
Yeah, for sure. And funny story, last month I heard about this guy who like some crazy returns in his trading, and his secret is basically mushrooms. So like, I don't know how sustainable that is, but trading on mushrooms. So he
takes the psychedelics and then he uses those to kind of see the future or something, or like how does
I think he feels the market flow better or something like that. I don't know what that's going to do to your brain long term, right? But like, it's an interesting thought.
Yeah, that is crazy. It makes me wonder if you can't just achieve that same thing through a different means, through like a non-chemical means or something.
That's what I'm thinking too.
Interesting.
Yeah, for sure.
Yeah,
it is an interesting thought though. All right, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
I love this analogy. My friends who are into martial arts, they like, be like water, like free flowing. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter. So there are some things that I used to say to myself, like, that's not possible, or you're so dumb, or I used to ask for permission a lot. And I realized that I was programmed that way partially because I was telling myself that on a daily basis. And have you come across, what were some of the things that maybe you were programming yourself with just by your speech?
Right. So it's interesting, the way I see it is, I guess you could say that I'm programming myself, but the way I see it is that it's kind of like water. So water will go down the path of least resistance, right? Like down the side of a mountain, and that becomes the river, right?
Yeah.
Okay. For everyone watching this, everyone listening to this, I think what happens is you go down that path of least resistance. And where does that come from? It comes from your experience. So it's exactly what you're saying, Hugh. It's the things that you've heard before in your family, like growing up, and that kind of becomes what you say to yourself. So in a sense, you do program yourself, but that comes from your experience, right? So your individual experience growing up, and particularly experience that you had with the important people in your life, and the experience you had, like the relationship you had with money, that to me is what you're talking about. Does that make sense?
Yeah, for sure.
Yeah. So what you're saying is true. Yeah. Go ahead.
So you're basically just perpetuating whatever was programmed into you, right?
Yeah. So yes, but I have a very subtle distinction, because I agree with everything you're saying, except I wouldn't say, just me, I wouldn't say it was programmed into you. I would say, like water, like you're like water, right? Like, so we're like the water. I love this analogy. My friends who are into martial arts, they like, be like water, like free flowing. Anyway, I wish, some ways I wish I was like a Bruce Lee, and I'm not. But anyway, so you or I should say Jackie Chan. I guess Bruce Lee is old. That dates me, doesn't it? Yeah. So what I would say, instead of saying that what's been programmed into me, I would say what I've found to be accessible, or like what's easiest for me to latch onto. And what's easiest for me to latch onto as a trader and as a person is what was around the house, what the things that I heard growing up, right? So I'll tell you what the big two for me were that I mostly grew up basically in a single parent household. Okay. All right. And so, my mom had relationships and stuff, but my father, like affectionately call him my sperm donor, because he was gone by the time I was 5, that sort of thing. So that was a big one for me, was trying to figure out, like, am I worth anything? If I was worth something, surely, you know what I mean? Like, if I was actually worth something, surely my father would be around. Like, he left. So I must be worthless. You know what I mean? So that's number one. And number two is my mom would always say things like, my mom was brilliant. Trust me. She did a great job with her kids. Unbelievable. Okay. This is nothing against my mom. I love my mom. She was literally unbelievable, the things that she was able to juggle at the same time. Amazing. So, but what was interesting was that, she would say things like, we can't afford it. And especially money doesn't grow on trees. Where do you think we'll get the money from? So those two things, so kind of like a low self-worth and this thing about money, which is like so hard to get, when in reality, if you think about it, and money is probably one of the most replenishable resources on earth.
Yeah.
I mean, they literally print it out of thin air.
Yeah, exactly.
You know what I mean? Ask any central bank. So that was actually wrong. Like in both things, I was wrong. Like the thing to do with my mother and my father had nothing to do with me, right? And then the thing about money is that money literally is probably one of the most replenishable resources in the entire globe. So that was for me. Like, and so what I would say is those things, I use those things to program myself. You know what I mean? I pulled on those things because they were so accessible, because they just were easy. And that was the path of least resistance, is to rely on those crutches. And so I had to like overwrite those, you know what I mean? And say, no, like logically, you can do that two ways. You can do it with logic, and you can do it with simple, like almost like emotion, or like like psychedelics, or like subliminals, or anything like that. Hypnosis is a little bit of both logic and emotion. But so that's kind of so it's kind of an interesting way to say it, you know what I mean? Like that you've been programmed that way. I would say, we have the choice to program what we want. And your subconscious is to me, your subconscious is like a dog. Like your dog can go and fetch that paper for you every morning. Your dog can make sure that he does his business in the right corner of the yard, all that stuff, right?
Yeah.
Or your dog can attack, everyone who comes to the door and can poop all over the place. You know what I mean? Like that's your subconscious. You just have to train it the right way to what you want, and that's what will work. You know what I mean? Like that's how I see it.
I believe that everybody's kind of programmed a certain way. I think it's kind of hard to get out of that. What do you think about that? Like your innate, whatever personality that you're born with?
Yeah, in some, like in psychology, they talk about internal locus of control and external locus of control. So the people that say like everything is due to them, like, oh, I'm in this situation because of the world around me. And then there's those people who say, well, I'm in this situation, but I basically chosen this situation through my path, the decisions I've made in my life. And so if I want to get out of this situation, I got to make other choices, And so you kind of see that in people who say like they're stuck in a job or whatever, when really I think internal locus of control is more realistic, and that you chose to go a certain way and got there. And so that's how I would say about your subconscious beliefs and those beliefs that are really kind of driving our everyday behaviors. You're right. I mean, you're right. Okay, you're right. The reason why it's so difficult to reprogram yourself is because most people aren't aware. They're not even aware. Like they're not even aware of the things they say to themselves.
Yeah.
Like, how they do like time management courses? They'll say, okay, write down everything you did for like a day or a week or whatever. And then you have a list and you go, oh my God, I've been wasting my time. Like, you know what I mean? I never do work. I'm always on Facebook.
Yeah, exactly.
Yeah, exactly. Yeah, exactly. Well, it's kind of the same thing, I think, with your subconscious, where if you actually took inventory of the things that you say to yourself and the things that you think and the thoughts that you think, you'd be like, hang on. So what's like my driving belief system here? What's going on? Like, and those will kind of come up in your self-talk. Like you get a little tiny glimpse of that when you pay attention to your self-talk. So I think you're definitely on the right track. I think, like from my point of view anyway, like thinking that way. But I think we just have to remember that we choose, like we literally choose how to run, like which programs to run, how to run them, and we can become aware of those. And another thing you can do is when you wake up in the morning, just start writing. Right when you wake up in the morning, you're in the hypnopompic state. So hypnagogic is when you're going to sleep. Hypnopompic is when you're waking up. And you can literally, in either state, it's a little bit harder to do when you're going to sleep for obvious reasons. But when you wake up, if you can just kind of write stream of consciousness, like in an emotional journal or something, and see those things, and likewise, when you go to sleep, you can make like a really strong fist, really tight, and then as you're falling to sleep, you'll start to feel it kind of relax, and that's when you know you're going to sleep, and that's when you know you should start thinking things that you want to sort of seed your subconscious. Like it might only be one thing, I take the best trading opportunities according to my strategy. I take the best trading opportunity, or whatever, whatever you're trying to, I attract money easily, or whatever you're trying to, like, you know what I mean? Overwrite with all that stupid crap that we've accumulated over time. Yeah, no, you're right. I think the programming is in the beginning of your life, basically. But then if you don't have the awareness to overwrite that, then it's going to rule your life. But you're right. If the awareness is important, and you just have to overwrite that at some point.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, I have to say, man, it kind of makes me sad, but like where I live, I have to walk by what in the States we would call it the projects, okay? But it's not, they call it something else here in Australia, I forget, okay? But where I live, I don't have to, but a lot of times I walk by. I usually ride my bike and walk. I don't like to drive a lot. And where I live, you don't have to, right? Everything's right here. So I go by these projects, and it kind of makes me sad because I see exactly what you're saying, Hugh. Like I see people, especially with their kids and stuff, and the things that they say, and I feel like, man, it would be so easy to, not easy, but if they just had this one thing, you know, if they just took stock of what they think and how that, you know what I mean, like how that's driving their lives, if they could just kind of just become aware of that and flip it. You know, it would make a big difference, and if people just feel like they're stuck, you know. Yeah,
no, I had a similar experience last week. This woman was in our neighborhood. She was looking for directions, and she said, "Yeah, you're all the rich people, but you know, I'm trying to get back to the poor neighborhood." And in reality, these houses they cost less than the ones over there where she lives. But it's just that mentality of this is the rich people and we're the poor people, right? So yeah, it's just the thinking.
Yeah, it's so true.
Yeah. Okay, cool. Thanks, Walter.
Thank you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
This works, and then, okay, I'll use it then, you know, that sort of thing. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, how's it going?
Pretty good. How you doing, Hugh?
Good. Good to see you again.
Yeah, exactly.
All right. So new podcast, slightly different topic. So I guess we can get started with the first one, which is,
let's do it.
Is psychology or your trading strategy more important?
Yeah, that's an interesting question. I guess it's like in science, you know, or in psychology, they're always nurture versus nature. For me, personally, I think I look at it, I did my PhD in developmental psychology. So we're looking at different stages. And so the way I look at trading is kind of the same way, where as traders, we go through different stages, and you may have a different experience to me in terms of, you know, what trading, like what that journey's been like. But I think that there tends to be an overarching commonality among traders, which is essentially that, you know, in the beginning, it's all about the system, and the entry especially. And then later on, you start to learn about the importance of exits. And then maybe you start to get into the importance of your risk rules. And the other side, I kind of look at them as two sides of the same coin. Risk and psychology is sort of the same thing. I mean, in a sense that if you really mess with your risk and really ramp it up, that will affect your psychology. And we all know that as traders, like the sleepless nights, worrying about the trades and things like that.
Right? Yeah, you get your alarm set and everything, right? Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, so I think psychology is very important. Probably if I pressed, I'd say it's the most important, but I think it's only important to you once you've already gone through those first stages. That's my point of view. You know, I don't know. What's your experience been like?
Yeah, I mean, I kind of think that if I had to put a percentage on it, maybe about 90% is psychology, because a lot of people, think, oh, the system, but that psychology is going to help you stick with the system, number one. Number two, keep searching for systems until you find something that works. So I think the psychology is like a really big part compared to the system overall.
Yeah. And if you think about it, I always like to think the extremes, and then that kind of highlights things, like the importance of things. So, for example, like what you just said, what if Hugh traded a totally different system, right? Would Hugh still be able to make consistent profits? And my answer would be yes, right? Let's face it, there are free systems available right now in the dark corners of the internet that will work, right? And you just got to find the one that makes sense to you, right? And yet we still spend all this money on systems and indicators and all this stuff. It's the reality. We want someone to put a stamp on it that we believe in and say, this works, and then okay, I'll use it then, that sort of thing. So, but then the reverse, what about the reverse? What if, and so I said the system, right? What if you swap out your system? Can you still make it work? The answer is yes. What if you have a pretty good handle on your psychology today and that's all going well, but then in the future you don't, you lose that part? Would you still be able to make money even though you're trading the same system you've always been trading? And the answer is probably no. So I think you're right. I think you nailed it. Yeah.
Yeah. What do you think about this thought of like, there's just some basic concepts in trading, regardless of the system, it's always there. So even if you switch systems, you're still looking at a similar type of structure, price structure, or whatever, right? Is that part of that, or do you think it's more of the system?
Yeah, I guess. Can you expand a little bit more on that? Because I want to know exactly what you're
so like if you
focusing on.
If you did like a moving average crossover, right? So that's just basically a turning point. So you could do the moving average crossover, you can do the Bollinger Band, you can do the head and shoulders at that point. That's kind of a system, right? But if you have the right psychology, you could probably spot, oh, that's just a turning point because of this, and not necessarily the indicator, right?
Yeah, and that's right. Yeah, I definitely agree with that. Like I think that you can see divergence on the charts without indicators on the charts, right?
Yeah.
Like if you look at charts long enough, and I'll never forget, I had a friend who'd been trading longer than I had, and he was really good at what he did, but he had all these really, like, I think he paid, I want to say he paid about, I don't know, $1,000 a month or $800 a month. It was something like that every month to rent these indicators that he used, right? And then he came out to visit me in Australia, and he was looking at the chart on his phone. He goes, oh, I got a signal now. I'm like, what do you mean you have a signal? That's a naked chart. Like, you don't have all your fancy indicators on there, like, because he had to have TradeStation, and I don't know if TradeStation is mobile now, but back then it definitely wasn't. And he was looking at his naked chart, and he goes, no, I have a signal. I'm like, dude, that's the 5-minute chart you're looking at, okay? You trade the 3-minute chart with a bunch of indicators. How do you know that you have a signal? And the reality is that he had looked at the market so much through that one filter that he knew exactly where the indicators would be placed. Do you know what I mean? Because he's just so used to it. Yeah. And I think there's something to that. I really do. I think that if you get someone who's been around trading for a long time, particularly with one filter, one point of view, one system, I think they will be able to tell you whether or not they have a trade, even if their crutch isn't on the chart. I do believe that. I really do believe that.
That's a good point. Yeah. It's kind of a crutch at me sometimes, right? Yeah, cool. Okay, great. Thanks, Walter.
Yep.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
When you find like a new system or a new indicator, you scroll back on the charts and you're like, this thing is gold. Yeah. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, what do you think about intuition when entering trades?
Oh, intuition.
Yeah,
this is a tricky one. There's actually a really good book if people are into this. I think it's called The Intuitive Trader. We can put it in the show notes for people who are interested.
Okay.
It's not very long. It's kind of a small little book, but if you're into this sort of thing. But I actually think the scientist comes out in me when I think about this, because I think that we have a lot of biases that affect our trading. Obviously, cognitive biases, you can look those up. One of them is that we know, like we know when things are going, like, really going to go, right? And maybe you're right, but the best way to find out is to test it. So what I always encourage people to do is just keep it in your journal. What I mean by that is, like, if you think that the next trade, like you think you have 90% confidence that the next trade is going to be a winner and unfold exactly as you see it, then write that down in your journal And then when you have a couple hundred trades, you can actually go back and you can group your trades by the ranking. So like say, all the 8, 9s, and 10s out of 10, see if those had a higher win rate than the 1, 2, 3s, that sort of thing. Like that would give you a good sense of whether or not you're right. Yeah. Because remember, the turtles, you guys can read about the turtles, obviously, in the Market Wizards and the New Market Wizards by Jack Schwager, those books, great books and all that. They were taught, they were beginners, of course. They didn't really know much about trading when they got into this, and were trained by Richard Dennis and William Eckhart. They were taught to go with the trade that they thought was least likely to go. So if they were almost fully loaded and their risk rules only allowed them to take on so much risk, they had to stop and go, okay, if I have to take corn or soybeans and it looks like soybeans looks better to me, like I think it's probably going to work out, go with the corn. Like that's what they were taught to do, because Dennis and Eckhart knew that we have these intuitions that are typically wrong, at least in the beginning. I do think as you go as a trader, you can fine tune them and get better, and there might be an edge there. But I think in the beginning, it's definitely not an edge.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah. And the open position ratios are a good point to that. Like people who follow the open position ratios among retail traders, to me, that's a really good gauge of the trend. And so when you see all these people going one way, it doesn't mean that the market's trending the other way, but it often is. So, that intuition that we have as traders, I think in the beginning is probably not so good, but maybe later on we can fine tune that. How have you, I know you've been working a lot on your psychology, and what have you found in terms of, like, do you have any data or you have any experiences in terms of locking into that and tapping into that as an edge in itself?
I don't have enough data yet, but I think it's exactly like you say. In the beginning, you think you have the intuition, and it's just wild ass guessing, right? But then later on, then you develop some sort of intuition. And then nowadays, it's more like, you have a feeling if the market's going to move in your favor or not. And when I've tracked it, bailing early I've been right more than often than I've been wrong. So you do develop that intuition going forward, right?
Oh, that's awesome. So far your data shows that you have like a bit of an edge there with your intuition.
Yeah.
That's awesome. Yeah, that's great. Yeah. That's great news. Yeah. People sometimes ask me, they'll say, hey, what do you think about just like going total free ball, just like whatever, you think is going on and that sort of thing. And I think that's a dangerous path. Like, I think if you just do that as a trader, I think it probably could work if you had decades and decades and decades. And maybe, like I said, you've got good data to back that up. But I think a lot of times, like for instance, right now, I'll tell you right now, this week as we're recording this, I have a bias on some charts, like the Aussie CAD, the Aussie Swiss, a couple of other charts that CAD Swiss is another one where I want to sell. But looking at the charts, like I look at the chart and I say, if I didn't have my sell bias, that actually looks like a really good buy. Okay. And it's hard for me to watch the market march and go up, for the last couple of weeks as I'm waiting for a reversal signal to sell and write it down. But that's because I've got my bias. So, I think you really have to decide. And sometimes you can do both. Like you can say, okay, I have my systems that have my rules, and this is my account that I'll do that in. And then I have maybe you have like an intuition account. If you have enough data that suggests that you're good at that, maybe do that and just have a race. See which one's going to make more, see which one, over time comes out ahead. Maybe that's the way to go. I don't know. But I think definitely you got to be scientific about it. You got to test it. You got to make sure that what you think is going on is actually going on, because it's so easy, as we know, when you find like a new system or a new indicator, you scroll back on the charts and you're like, this thing is gold. Yeah. It never works out that way, does it? Yeah.
No. Okay, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice. I don't know why we're just built like that or something, right? Like some of us have that tendency to take it personally.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, what do you think of FOMO? How to deal with FOMO? Like, you missed a trade. It's a really good trade. It turned out to be a big winner. How do you go forward?
Yeah. And it comes in so many forms, doesn't it?
Yeah.
Like you could have a situation where you missed on the trade and the trade went just like you thought. And for whatever reason, you weren't around the computer, or you didn't block out that time, or maybe you're on an airplane. That's happened to me before, back when people used to go on airplanes. We're recording this right now when no one's going on any airplanes right now and the airline stocks are tanking. But yeah, so there's that. And there's also the other bit, which is like, I think comes in when, as a trader, you get a little bit more advanced, where you're like, all right, I had this trade and I was in it, but then I got out too early and oh my God, it's gone another 500 pips. Like there's another FOMO where you start to like, and that's dangerous too, because that can lead you to tweaking your strategy, which maybe it's a good thing, but a lot of times that's a slippery slope too, to go down that path where you start changing your system because of one sort of, we might even call it an outlier trade that's not very common, right? So yeah, that's tricky. That's definitely a tricky road to go down. So I think you really have to put it in perspective too and say, like, why do I feel like I'm missing out? Why is it? Is it because my exit strategy doesn't capture the big moves? Is it because I want to trade more often and I feel like I'm under the gun to up my income from trading so I can quit my job? What's the motivation going on there? Is it because all the headlines, like all the news is saying to buy gold and I didn't buy gold? Like, where is it coming from? And I think as traders, I feel like our job is to the pressure should really be coming from our system rules. And I know that seems kind of weird. Like, what do you mean system rules? But I think most of what we do, we should really strive to point back and say, okay, the reason I did that is because of my system rules. Okay. You can argue whether or not those are correct or not. And you might look at my system rules and go, dude, what are you doing? That's okay with me. Like, that's totally cool with me. As long as I can look at myself in the mirror and say, I did the right thing. I took the right trade. That like I followed the rules. That's really important to me. And remember, I don't know if you remember this, but remember at the London conference we did with Rima. Rima's a great trader, right? I think someone asked him during his presentation about trading big shadows, and they were saying, well, what if like it's almost a big shadow, but it doesn't quite, like, it misses it by a few pips or whatever. He's like, dude, you got to have the line somewhere, and he's like, I won't take it. He was like, that's how firm he was. Like, I'm not gonna, if it doesn't fit my characteristics, I'm just not gonna take it. So I think that's actually a really good thing, and I know people kind of rail against that, but I think the problem is if you don't follow it in such a strict manner, you just run the risk of blurring all the lines, and that can lead to problems, especially in the beginning. I mean, with experience comes a little bit of discretion, but I really do think if I had two traders and I knew one of them was really conscientious and he was going to follow his rules, and the other one, like, she was a little bit more wild and a little bit crazy, I would bet on the more conscientious trader who's going to let trades go and have that FOMO, even though and miss out, knowing that he's gonna stick to the rules, regardless, throughout any sort of market situation. So to me, I think the pressure should come from your rules, I guess.
That's a great point. Yeah. Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode. At least for myself, I think one of the issues was taking everything personally, like being wrong. And that was a reflection of me somehow. I was wrong on that trade, so that's why I'm beating myself up about it. But I think once you can learn to forgive yourself for that and just kind of move on to the next one, like you said, follow your rules, then I think it becomes much easier, right?
Yeah, and you guys, we can all learn a lot from the sports psychology stuff, right? Where think about the greatest batters in baseball history, like 7 out of 10 times they sit down. You know what I mean? Like they, it's only 3 out of 10 that they actually get on base or hit the ball or whatever, right? Like that just doesn't happen. And it's the same thing. Like to use like an NFL, I like to follow NFL. So gridiron, we call it here in Australia, gridiron. The players who get burnt, like the cornerbacks, so they're the defensive players that get burnt, right? And so people are scoring touchdowns on it. They have this thing called a short memory, right? Like, I got to have a short memory, just go back to the next play. The only thing I can control is the next play, and this mentality. And if you can sort of adopt that, maybe read some of those books about sports psychology, you can kind of get that mindset. Like, really, the only thing that matters to me is my next trade. If I screwed up the last trade, if I flubbed up the exit, if I ruined the entry, if I got my risk wrong or whatever, like there was a guy in the forum, he accidentally had a trade size that was 10 times bigger than he wanted, right? So he fat fingered his trade. Like, it doesn't matter next time. It doesn't matter because it's a new slate. You start over, you just follow your rules again. Like, all that stuff that happened in the past, it really... But the problem is, it's so hard, isn't it, as a human to let go of that?
Yeah, it is. It's really hard, and I don't know why we're just built like that or something, right? Like, some of us have that tendency to take it personally.
Yeah, and maybe it's adaptive. Like, maybe when we were in the jungle as hunter-gatherers, we saw grandma eat that green berry and she died. And so we're like, okay, you got to stay away from the green berry, right? Yeah. I mean, maybe that's where it comes from. It's just like we're kind of fluid in our behaviors and adapting, and that's, that might be like an adaptive, trait in most life, but obviously not in trading. Obviously not in trading. It's really hard to make trading work if you're continually changing. Yeah.
Yeah, good point. Yeah, short memory. Remember that.
Exactly. Yeah.
Yeah. All right. Thanks, Walter.
Yeah. Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice. Hey, Walter, before we start this episode, how about we do the drawing for last month?
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Let's do it. You got your randomizer on there? Is that what's going on?
Yeah, I think I'll put it in a certain order, and then you pick a number, and then we'll see who that is.
Okay.
So we got 26 comments and ratings from iTunes. So why don't you pick a number between 1 and 26?
17.
17.
Let's see what we get.
All right, cool. So I'm going to hop over to YouTube. And so Veronica Henderson, you are the winner for last month. And what are you giving away, Walter?
Well, we're going to send her a psychology book. How's that sound? Good?
Sounds good.
Yeah.
And that's from you. And for me, Veronica, you get a 30-minute coaching call for free.
Cool.
So,
all right. So Veronica needs to send in her, and where will she send in her, or how will she send in her address or whatever? You know what I mean?
Yeah. I'll try and contact her through YouTube, but Veronica, you can send in an email to hi@thinkprofit.io, and that will come to me, and I'll take care of you.
Sweet. Thanks, Veronica.
Yeah,
cool.
Thank you, Veronica. All right, cool. So let's get into this week's episode. I thought we could talk about feedback loops, like positive feedback loops, and creating rapid feedback loops to improve yourself faster.
Right. Okay. Yeah. Well, so from my point of view, the lower the time frame you're trading, obviously, the faster you're getting feedback on your trade decisions. But beyond that, one of the tricky things about trading, I think, is getting stuck in the improvement idea because there's the element of chance, right? So because we can't really account for the random nature of our sequence of wins and losses, we can anticipate losing streaks, the worst type of losing streak, the typical losing streak, the biggest sort of win streak. We can use that you can use that to change the way that you manage risk and stuff like that if you want to get really sophisticated. But the other thing is there's a real temptation to ascribe responsibility for a given trade's outcome to elements of your system and then have to go back and, rejig it. So that's one thing that's really critical. So the two takeaways from me would be, if you're trading lower time frame, the good thing is, if you can do that, you will get almost instant feedback. Like if you're trading the 5-minute, 3-minute, 2-minute charts, you're going to get this feedback like really quickly, which is great. But there's a real temptation for us to tinker with things. It's never like, you think about it. when the Wright brothers came up with the airplane, the one that they got off the ground, you know, lots of people around the world were trying to get off the ground.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
And interesting fact, did you know that Harry Houdini, the magician, was the first guy to fly in Australia?
Yeah, I heard about that.
Yeah, he packed all this stuff and brought it down to Australia. But anyway, so that airplane that the Wright brothers created, like, we as a species, we don't like just go, oh, we got it. We got an airplane. We're good to go. You know, like, we don't do that. We're always kind of like making it faster, better, more comfortable, more efficient. Like, that's how we're wired. Like, we're engineers by birth, really. And even you can watch even like little kids when they build a sandcastle or something, they're just, you know, they're always trying to figure out, okay, well, this collapsed, so I'll do that. You know, it's in our nature. And so I think for trading, that can be a bit of a slippery slope. And I'm always kind of guarding people against that, you know, so that's, but yeah, so your feedback should be, so you want to account for hindsight bias. So a good way to do that is with your journal. So in your journal, you can write down how well you think this trade is going to work out, like on a scale of 1 to 10 or 1 to 5. I think it's like a 5. This is brilliant. This is a great 1 to 5. This is a 5. This is a winner. And then you can go back and see if your intuition really works. And you can go back and when you exit your trades, go back and look at your exits. How well did you sit with your rules, or did you change things up? So that's a really good way to incorporate that, especially if you're using higher time frames like I am, and your trades kind of take, like, why did I take this trade again? Like, you know, you need to have a good record, right? What are your thoughts on using feedback, or how feedback interacts with trading?
Yeah, that's a really good point you made about trying to tweak things. I think people buy courses, or they have, you know, forums, and then they always want to tweak them. So that's a good point. I would add to that, I think it's important, especially if you're trading the higher time frames. Like you said, if you're trading a 5 minute, yeah, you get a lot of feedback, and you get instant feedback loops, basically, right? But if you have a higher time frame, figure out ways to create that same sort of repetition, but not doing it necessarily in the live market. So you could do Forex Tester, do some back testing, just practice your setups. You could look at your old journal entries and take a look at the winners versus the losers, and kind of focus on the losers and see what you're looking for. And then at the end of the week, you can also take a look at the trades that you may have missed. And, you know, that, like you said, that could suffer from hindsight bias, but that can also give you repetitions that will allow you to improve faster.
Yeah. And yeah, that's great. And the screenshots too, you know, like if you have a screenshot before, like at entry, and a screenshot at exit, right? Yeah. And you can have a screenshot of what you consider to be like a perfect setup, and compare that to the one that you're about to take. Make sure, like, am I saying like a similar thing here, or is this very different? Like for me, as a pattern trader, that became really important for me to make sure that I knew that I was trading the pattern and what I saw, and not what I thought. You know, the more you get into news and stuff, and I love FX Street. Like, FX Street's awesome. They're awesome. But spending too much time on there and reading about what other people think about the markets, to me, that's something that, well, it's the same with any business newspaper or any business website, like any economic related thing. Like, you can really get stuck, and you know, to the point where you're blind to one side. Like, you just buy only or sell only. So yeah, it's really tricky. Yeah.
Okay, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only, and is not trading or investment advice.
These are the sorts of people that don't make it as bank traders, right? They get fired. Yeah, they get fired when they make the mistake twice. They're done. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
So, Hugh, we have a question from a trader, good friend in Ireland, but he's from South Africa. Really cool guy. And he has this issue of he will backtest his strategy, get his numbers, get everything set up, everything's right, everything looks good. But then what happens is during the week, he'll start taking trades that are not part of his strategy. So he'll like see signals from other traders or another system that looks really good that he hasn't tested or whatever, and he'll take the trade. And so the question is, well, what do I do to get around this?
Yeah.
Like, how do I, like, this is an issue. It's really impulsive trading, right? Is what it is. So I have some thoughts on that. Do you want me to?
Yeah, sure. Go for it.
Okay. So there are a couple of things you can do. So this impulsivity, if you take like a personality test, you would probably see that you're high on impulsiveness. So you need a good personality test, like the Ocean, which is the big 5. If you just Google, like, I'll put a link for guys in the show notes so you guys can take it. But if you're high on impulsiveness, then that would be the kind of thing that would come up. And this is tricky because, like, these are the sorts of people that don't make it as bank traders, right? They get fired. Yeah, they get fired when they make the mistake twice. They're done. So what I said to him, I said, you need a trading accountability partner. You need someone to talk to every week. On the weekend or whenever, and just go over your trades and let them go through everything and see why you took this and all that. Also, I like to use you only have a certain number of arrows to shoot. So this is really good for, actually, scalpers use this quite well. This rule where they say, like, actually, I was talking to a trader this week. He has a 5-minute scalping system, and he only gets 2. What he's basically trying to make is, if he can make 1.5% a day, then that's his goal, and he only gets 2 arrows a day. And that's kind of what I recommended to my friend. I said, look, just give yourself a certain number of arrows, whether it's 2 arrows, 3 arrows, whatever is a day. And after you shoot those 3 arrows, you have to come back the next day. And your trading accountability partner on the weekend will say, okay, let's say, how many did you do on Monday, Tuesday, Wednesday? Which system was this? Is it a system you actually tested, or was it some, Yahoo on the internet saying that the euro is going to go up or whatever? You know what I mean? That sort of thing. So that's that was a pretty. And then also, I suggested I can put a link in for people interested in the show notes. For people who are interested in the subliminals, there are subliminals for impulsiveness. There's hypnosis tracks for that sort of thing. So if you're accountable to somebody, if you use the arrow technique, if you're working on your subconscious, those are the 3 things that I would recommend to do if this is the kind of situation you find yourself in. Yeah.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode. Okay, cool. Yeah, I personally have a slightly different opinion on that one. I think the arrow technique is good. Like, I only allow myself 2 entries per trading idea, so that really limits the losses also. But I think also maybe one thing to consider is if maybe you feel too restricted by a system. Like, if you should be more of a discretionary trader who just reads price action as opposed to somebody who has a set system and only trades that system. That kind of goes against some logic and some things that I also teach, but I think there is that personality type that is more of the discretionary trader and wants to have more variety, and the system might be like restricting them. And I think that that's something that can be back tested, something that can be practiced every day, but it's less about having a set system. So I think that's maybe something to consider also if you find yourself straying away from the system that you're supposed to be trading. I read a lot about like ADD personalities and how sometimes these types of people have to do a project, put it down, do the next project, and then come back to the other project. And it's just the variety. They need that variety. So that could be one of the things to explore if you find yourself not being able to follow a system.
Yes, I definitely agree. And another thing you might look at that occurred to me while you were explaining, I think, some people will say, hey, Walter, why don't you just, like you said, just read price action? Why don't you just trade price action? And my question for you is, have you tested it? And so what I would say is, what if you take all of your strategies that are tried and true and back test and all that, and you're trading those on your live account, and then at the same time, in parallel, you have a demo account. What you're doing is you're taking all of these, like sort of reading the market or gut feel sort of thing, and see and have a race. Have a race. Who wins every quarter, every 6 months, every 9 months, whatever it is, and see like where do you fall out in terms of the demo account versus the the live account, and see if it's actually better. Because I feel like we do run into hindsight bias with this sort of thing. We kind of trick ourselves into saying, oh no, this system's amazing, but it's easy to skip over, you know what I mean, when it doesn't work. So I agree. I definitely agree. I think that's definitely another way to do it. And if you have that data, though, and you can go, well, look, I've got this demo account, and I've actually been just fully trading discretionary price action reads on this one, and it's actually pretty good, then that might give you a reason to consider moving a small account into that, to that method or something like that.
Yeah,
for sure. Yeah.
All right. Thanks, Walter.
Cool. Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
We could print the turtle rules in the Wall Street Journal, and a lot of people wouldn't even trade them.
Yeah, nobody would.
Why is that?
Yeah.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. All right, Walter, talking about trading or changing trading systems. So you're at that point where you want to change your trading system. What should you consider?
If it makes any money. No, yeah. No, obviously, yeah. No, I think, the two big considerations are, I'd say three actually. Is it related to anything that you're doing right now? In other words, are you just kind of trading almost the same? Will you be taking almost the same trades with adding another trend following system, for example, right?
Yeah.
Number two is, are you going to be able to trade it depending on your lifestyle? Like, for example, if I'm trading the 6-hour charts where I live, I have a problem because I miss the 1 a.m. one, which is pretty darn good, right? That's a 1 a.m. candle that prints at 1 a.m. that I would miss. So unless I've got some sort of automation going, you know what I mean? Whereas the 8-hour charts is a little bit different because I can get all three in, right? Yeah. So, there's sort of considerations around lifestyle. Is it related, highly correlated with something you're already trading? Can you actually take the trades? Like, it's going to fit in your lifestyle? And the third thing is really, what's the goal? You know what I mean? Like, what are you trying to do? Are you is it variety? Like, other people, I think we talked about in another episode, ADHD, always kind of moving to a new thing, and it's exciting. But what are you trying to do here? I think it makes a lot of sense if you're trying to flatten your equity curve so that you have a strategy. Like, if you have a trend following system, and then the one you want to add is a reversion to the mean system. If that's what you're trying to do, that would make a lot of sense to me. Like, let's say you trade Donchian breakouts, right? You're a trend follower. And then you want to add a Bollinger Band strategy where you have a really wide Bollinger Band or whatever, like a 3 standard deviation Bollinger Band, and you wait for the market to make, double tops and double bottoms at the edge of the Bollinger Band or something like that. Like, that would make sense to me, because those two strategies are probably going to come out with a super low correlation, even if you're trading the same pairs and the same time frames. Yeah. So that's ridiculously good idea if you can make it work, right? Yeah. So that's what I would basically say. Just those three things. What about you? What are your thoughts on that?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode. Yeah, I mean, similar thoughts. It has to match your lifestyle. I know early on, I would learn like New York Open trades, and I wasn't even awake for the New York Open, so it didn't make any sense. But that's what we do, right? Like we jump on a system that we think looks good, or the trader said, oh, I made like 50% in a month or whatever, and then we just jump on it because we want to make that money or whatever. And then, like you said, what do you want your life to look like? Do you want to be trading for like 2 hours a day, or do you want to be day trading for, like 30 minutes or whatever on the New York Open or whatever? Kind of build your strategy selection around that, instead of jumping on something that's the most profitable, or the most, has the most trades in a month or whatever. So that's what I would say.
Yeah. I mean, sometimes we don't actually consciously acknowledge what we're trying to get.
Yeah.
Like when you're scrolling the internet looking for like the quote best system or whatever, like you just have to be really aware of the fact that there are some really good strategies out there that work really well for some people, but you might not be able to trade it. Like people, like, you know what I mean? Like, especially like the people listening to this, you are most likely to be the type of person that likes to figure things out. So you're not probably going to be the type of person that's going to sign over your account to a signals trader, right?
Mm-hmm.
Like with those social trading platforms or whatever, like where they hook up your account and just like, you're the kind of person that wants to know how to trade. Like, that's why you're here, right?
Yeah.
Most likely. So it's hard for you to let go of that. What that means is, finding really great strategies is one thing, but, making sure that they fit with you is another thing. Because everyone, you just can't, you won't trade it unless it really matches up to what you believe. And that's why I think when they mentioned, I think it was Richard Dennis was saying about the turtle rules, he said, look, we could print the turtle rules. This is when they were a big secret. They're no longer a secret, but when they were a big secret, like, look, we could print the turtle rules in the Wall Street Journal and a lot of people wouldn't even trade them.
Yeah, nobody would.
Well, why is that? Yeah, exactly. Like, why is that? Well, it's because some people would look at that and go, that doesn't make any, like, no way. That's not for me. Look at all those false breakouts or whatever, that sort of thing. Yeah. Meanwhile, you have these turtles that learned it and went on to manage more money than Richard Dennis did. So it's just funny to me that, people think that it's like finding the hidden treasure, in a lot of ways it is, but it's not, the system isn't the hidden treasure, right?
Yeah, exactly. Cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice. Well, if you get too down on it that you missed a trade, I think it also blinds you to another trade setup that could be happening on that same pair. And that really kind of brings down your psychology.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter. Today we're going to talk about patience. Johnny wrote in and he asked, I'm having trouble sticking with profitable trades. And he makes some profit on some, but I think he's really dealing with cutting his trades too short, or he feels like he's cutting his trades too short, his profits too short, and he's getting out a little too early. So what would you say to that, and what kind of tips would you have for him?
Yeah, well, that's a common one. So I'll tell you a story. So I had a friend who was a scalper, and he traded the 3-minute charts. And there were plenty of days, he would trade the New York Open. There were plenty of days when he would be kicking himself because he would literally like get in on the double top on the 3-minute charts of the day, or, you know what I mean?
Yeah.
And I said, well, dude, that's not your strategy. Like, your strategy is to make 15 pips, 20 pips. Like, that's how he traded. Look, it's a missed opportunity. So one of the biggest things for trading, like I missed one last week. I had a Swissy trade all set up. I put everything in perfectly, my order and everything, and it didn't retrace enough. It was a sell limit. It didn't retrace enough to get me in the Swissy, and then I watched it go literally like the next 24 hours. And that's the hard thing, right, about trading.
Yeah.
I think you just need to decide who you're going to be, because if you're going to be the type of trader who bags those really big wins, and that's what you're looking at on the chart and going, oh, wow, I missed that, then you need to build that into your strategy. Okay, so if you're a 3-minute chart trader and you want to occasionally get those big wins, maybe you take like 2/3 of your trade off when you hit 20 pip target, and then you trail the rest, and then 1 out of every 8 or whatever, you'll get a nice big fat win, and that will bump up your average R. But trading is dealing with the missed opportunities, dealing with the emotions, dealing with, figuring out why you do certain things when you know you shouldn't, which is all the psychology of it, which is what we talk about here, right? So yeah, I mean, either build it in or just let it go. That's what I would say.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode. Yeah. I think a lot of that is also like, you don't think another good opportunity will come along again. If you just keep in mind that, okay, there's going to be another opportunity out there, there's going to be another chance to make some money, then you can just let this one go and, take whatever you make, 1 hour, 2 hour, whatever your plan was, and then not really obsess about missing this one trade.
It's so true, man. And that to follow up on that, Swissy, the next couple days, I had a New Zealand yen trade, and I got in at within 2 or 3 pips of the high of the day and sold. And it, so one of them, it went to where I wanted to get in, and the other one, it didn't, it didn't retrace enough. So that's exactly it. I think, and that's one of the things I learned from my friend who was doing the 3-minute scalping stuff. He would say that all the time. He would go, oh, well, there's always going to be another trade. He was really good about that. Yeah. And I guess that's easier when you're trading the 3-minute charts.
Yeah, that's true. That's true. Yeah.
If you're trading the daily charts, and you get 8 signals a month or whatever, and you're like, well, there will be another one. Yeah, could be another 2 weeks or so. Yeah, exactly.
Yeah, that's true. That's true. And I think it also blinds you to, well, if you get too down on it that you missed a trade, I think it also blinds you to another trade setup that could be happening on that same pair. And that really kind of brings down your psychology and your profitability too, right?
You're right. Yeah, that's a great point. And it's also why, when you think about it, I learned this from an old trader. He was saying that, when you're in a trade and you're riding it out and then you finally get completely out of the trade, if you think about it, why did you get out of that trade? Okay, so if you bought, for example, you bought the pound and it went up, and then you got your signals and they all got you out of the trade, why wouldn't you just go short? You know what I mean? Is there a difference between an exit signal and an entry signal? For some systems, there isn't. So he would say that the reason why traders have a hard time getting right back in is because they've spent all their psychological energy on the trade, and they kind of want to rest. And I totally identify with that. And I was like, wow, that makes a lot of sense. And I think that's kind of what you're getting at. You know what I mean? It's kind of part of that thing. Yeah.
Yeah. You're tired and you just want to take a break.
Yeah. You don't want to deal. You just want to deal. Yeah. Exactly. Yeah.
Yeah. That's a good point. Okay, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
I've heard about a guy, I don't know if it's true, I don't know the guy, but I heard about a guy who was doing kind of a similar thing where you would have a 1 pip stop, and he stopped out all the time. And then he would occasionally a 500 pip win where he'd make 500 R or whatever. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. All right, Walter, I know you have some experience talking to Darren with this. I want to talk about random entries. What are your thoughts on the psychology behind random entries, just entering anywhere in the market, putting in a stop loss or whatever, and take profit and just letting it rip?
Okay, so got 2 main thoughts. So my first thought is that this is an exercise I encourage people to do, like people listening to this or watching this podcast. I would say try it out, because it's a really good way to highlight the importance of your exit rules, which a lot of people don't focus on, number 1. Number 2, that's really important. It's a great lesson to do that. And the other thing is, it's interesting that You would think really sort of data-driven, logical traders who are like programmers and have that sort of background. It's interesting to me that many of them won't apply a strategy if it doesn't make sense. So this kind of speaks to what you're saying. Like there's software out there that you can get. You feed all your data into it, and it will come out with a strategy that will say, hey, every day at 3:15 p.m., you need to buy the euro against the dollar or something like that. Some sort of, data-driven rule. And a lot of traders, they'll go, why? That doesn't make sense. And they won't trade it, even though the data is looking at them in the face and it says, this is a profitable strategy. You know what I mean? So I think that you kind of have to decide as a trader, are you going to be hands off and let the data tell you what to do? Mm-hmm. In this instance, what you're talking about is, what if you had a strategy where it was random entry and you just had a really kind of cool trailing exit that took advantage of the occasions when you were right? And so would you trade that? For most traders, the answer is no. And it's the same reason why a lot of traders want to be discretionary and want to have kind of have their hands dirty when they enter trades. And I'm just as guilty as anyone. So I think it kind of gets at the core, this idea of, why do you need to have a logical entry rules? It kind of gets at the core of what you believe as a trader. Is it that you are making the trade, like you're making this happen? Or is it that there's just randomness in the market? Occasionally these things pop up, and that's why the buying the euro at 3:15 every day sort of thing works. You know what I mean?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Mm-hmm. So it really is up to you. And most traders can't do that. Most traders won't be able to take random entries. It's a very unusual thing that you'll run into somebody that can do that. I've met a few, that are usually like programmer types, and they're like, yeah, this is what it shows, this is what we find, and this is what I'm going to do. And so you can do it. You can definitely do it. I mean, all the tools are there now. This wasn't the case when I started doing neural networks in 2004, 2005. I was using neural network software that wasn't trading related really. Mm-hmm. And so it was kind of clunky, but now today, there's all these really cool softwares that you guys can use. Maybe I'll put some links in the show notes for people interested, and it literally will spit out a strategy and say, well, based on your data, this would work. Now, that doesn't mean it's going to be profitable in the future, whatever. That's like the first step for a lot of these people who want to use machine learning and these sort of advanced, in vogue algorithms that are kind of taking over the world. Yeah.
No, that's interesting. You mentioned that because I coded up a simple EA. It was just taking a 20 pip stop loss and a 200 pip take profit, and I just coded up one side, just say buy all the time or sell all the time. The system was profitable. I mean, it was marginal, but you just let it rip, and it made money, and I never went back to it because like you said, I don't know if I could really get my head around trading that with real money, but maybe at some point I'll revisit it, because just a simple idea like that, I'm sure could be optimized a little bit more.
Yeah, I can see the wheels turning in people's heads who are listening to you say that about your EA. Yeah. Well, what if I used, moving averages or MACD to kind of give me a direction, and then I would just turn it on, I can see people definitely doing that. Yeah, and it makes sense. I've heard about a guy, I don't know if it's true, I don't know the guy, but I heard about a guy who was doing kind of a similar thing where you would have a 1 pip stop, and he stopped out all the time, and then he would occasionally a 500 pip win where he'd make 500R or whatever. Yeah, I don't know if that's true. I do know there is a guy, though, that trades 20 to 1, and he has an 8% win rate. Matthew in London. And so that's kind of cool that there are people doing it, I think. And he said, what he was saying was that I think there's logic behind it. I don't think it's random entry. He didn't really tell me. It was interesting. He was saying he thought he had to have it automated because he wouldn't, psychologically, he wouldn't be able to take 92% losses, keep entering.
I think that was the biggest issue for me. There were so many losses in a row. And in live trading, I don't know if I could handle that, but
of course.
Yeah, if you automate it, might be all right.
Yeah, exactly. Cool.
Cool. Yeah. Thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
It's obvious.
Yeah. It's like trying to watch a YouTube video on how to ride a bike for the first time, and then you go ride the bike and you fall on your ass, right?
Yeah. That's so funny.
Of course, you're not gonna have confidence.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. All right, Walter, here's a classic one. Fear of entering a trade. Some people are afraid to pull the trigger. What are some of the psychological things you see behind that and some fixes?
Well, it's kind of like, I think about sports, right? And it's specifically like coaches. So like I like to watch NFL, and what's interesting in gridiron, as they call it here in Australia, gridiron, it sounds so much more manly, gridiron, you know? But when the coaches are always talking about in NFL about how, you know, being prepared, and even the players will talk about like when they move from one team to another, like, wow, things are so different here. Mm-hmm. You know, everything's so accounted for and they've considered every scenario. And I think that's kind of in a way what coaches are meant to do, is to kind of provide this framework for the players. So no matter what happens, you know, they know what to do, sort of thing. In trading, it's the same way, because if you're not prepared, that's when you feel like uneasy. Right. Mm-hmm. So you tell me, like, if you were to, like, I'll ask, if you were to take a strategy, and strategy A, you've back tested, you've taken 900 trades in it, in the strategy, and you know the numbers, and then you go, okay, I'm gonna go live today, versus you have a strategy where you kind of was just messing around with something the last couple hours, looks pretty good on the charts, let's go for it. You know what I mean? Which one are you gonna stick with after you have 9 losing trades in a row, right? It's obvious.
Yeah. It's like trying to watch a YouTube video on how to ride a bike for the first time, and then you go ride the bike and you fall on your ass, right?
Yeah. That's so funny.
Of course, you're not gonna have confidence.
Of course. That's exactly what I did last weekend with my daughter. Actually, we were looking at YouTube on how to roller skate.
Okay.
And I'm like, dude, I'm like, you know, because I didn't know how to teach her. You know, I just fell on my butt as a kid, right? Like everyone.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
And she's really keen on the roller, and she's been talking about it constantly. So I'm like, okay, we're gonna go to like an empty parking structure where there's no cars or anything, a nice smooth pavement. And she was having trouble, so I said, well, let's YouTube it. So we YouTubed it, you know, and we got a couple of tips. But you're right, we were still falling all over the place. Like it was still terrible. And of course, that's the same thing with trading, right? Like if you're the goal really, I think, as a trader, it's like in sports or in battle. I kind of hate the battle analogies because it's so different, but real life is different to, like, you know, going into war or something. It's not. I know people say that with trading and business and stuff, but it's not to me. It's totally different. But anyway, so if you're super prepared, you've got your numbers, you've got that experience, you've traded in sideways markets, up markets, down markets, all that stuff, you are actually going to have a bit more stamina than that trader who just kind of pulled that stuff out of his behind last afternoon, you know, in the last afternoon. So that's under your control. It's not like a personality dimension where you say, like, some people are very conscientious and everything has to have its place, and other people are, you know, open-minded and can experience new things, and other people are closed-minded and want to have a routine. And, you know, it's not like that. It's a thing that's up to you. Like, you decide how experienced are you going to be in your strategy before you risk real money, and how much do you know about it? Like, do you know what the probability is of 9 losing trades in a row? Do you know what that is for your strategy? Like, if you don't know that, you have a 29% chance of having 9 losing trades in a row, then you might think that something's broken, right? Mm-hmm. So there's a lot that goes into being prepared. And to me, that's why you would be fearful. So the reason why you have, like, fear of taking a new trade, even though you have a solid signal, is because you're afraid of what's going to happen. Why are you afraid of what's going to happen? Well, because of what happened in the past, right? Yeah. Well, I had a bunch of losers in the past. So the question is, do you know this is normal based on your preparation? Or do you just think you're not prepared enough, so you don't know? You think, well, this is it. It's broken. So
I think it's also worth mentioning, sometimes when you go live with it, maybe you're taking too big of a position size. And that's, if you just scaled it back a little bit, sure, you won't make as much, but then you won't actually take the signals, right?
Yeah, and that's how our friend Alex in the UK, that's how he got really good at trading, was he just risked a really, really, really tiny amount. he's like, dude, I had perfect execution. Like,
Yeah.
he never had any problems. Like he literally trained himself to execute his strategy flawlessly because he's like, I'm risking 0.25%. What can possibly go wrong,
Yeah.
So, yeah.
That's a good point.
Yeah.
Okay, cool. Thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
A really good way is self-talk. Like when we all talk to ourselves, or I hope we all do. I hope I'm not the only one. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, what do you think about different methods of rewiring your brain for success? What have you tried? What have you seen work? Stuff like that.
Yeah, it's a great question. I know you've tried quite a few things. I'd be interested to hear. It's funny, isn't it? Like there's sort of two competing ways to look at it when you talk about this. One would be like set a map for me to do what I want to do. Like it's sort of the attract, like what do I want, right? Mm-hmm. What do I want to achieve? What am I trying to do? Where am I trying to go? Versus the other side of it, which is what am I trying to get rid of? You know what I mean? So people get it confused. Like I believe that people look at your subconscious and they say things like, oh, your subconscious is sabotaging you or something like that, right? Mm-hmm. But that's not really how I look at it. It's like if you're a programmer, you can create any program you want. That program could be like a virus, to hack into, and steal people's passwords or whatever virus, or shut down your system and stuff like that. Or you can create a program that kind of sets you up on the path, right? Mm-hmm. And so the way that you can do that, there's lots of different ways. So hypnosis, right, which I'm a big believer in, especially for habits. Like if you have a habit of, let's take what I did was I would move my stop. So if I had 150 pips of risk on a daily chart trade and I saw that it went 120 pips toward my stop, I would move it because the trade's right. I just need to give it a little bit more room, I'd say that.
Yeah.
And that was my big habit, right? So, hypnosis works really good for those sorts of things, like stop smoking, stop overeating, stop moving your stop loss when you shouldn't, like things like that. I've also used what's called the Neo Neurophone, and I can put a link in there. Unfortunately, for the show notes, you guys can check it out. Unfortunately, I do believe that the Neo Neurophone is no longer available. However, you might be able to find used ones, and you might be able to find an older version of it, which is a little bit different, but it basically does the same thing. It's an amazing device by a really cool inventor who died just recently, I think just last year. Yeah, January. Yeah. So anyway, that's another thing you can use to program your mind. You can use subliminals, right? You can listen to those when you're back testing, when you're around the house and you're sleeping at night, which is what I like to do. Sometimes I'll turn on during the day, but usually I just have them run at night. There's all kinds of things. There's like tapping, right? That people have used. There's also a thing where you kind of like test your beliefs with your body, and you sort of reprogram your body or reprogram your subconscious through that, which is really kind of interesting. I think for most traders and for most people, really, the key is to get to the deeper level. When you realize like I have an issue or I'm not going where I want to go. So those two things. So I'm trying to get rid of an issue or I'm trying to map out progress to where I want to go. Once you decide which, what you're trying to remove or add, then I think the important thing for you to do as a person and as a trader is to really sort of zoom in on the deeper thing, right? And so that could be like dream analysis that you can do that. And so what you're trying to figure out is why is it that my subconscious program is setting me up for this? Why is that? What's going on? And then you can reprogram it, right? I've never done it, but people who talk about, I know we're getting into the sort of esoteric stuff here, but that's cool. And the esoteric stuff is cool. Like people who do like past lives therapy. and they'll talk about things. I've tried to do it, but I didn't really I should have gone to a hypnotherapist or someone who specializes in that. I've actually just listened to CDs and stuff like that do it. And I never really, I always just fall asleep. So, and I haven't really made much progress there. I would like to though. But yeah, so I think the real key to me, there's a couple of things. Are you trying to remove something or are you trying to get something? Obviously, we want to do both, right? We want to figure out what's the issue and then how do I map out where I want to go? And then the other thing is, it's not just writing down affirmations or like staring in the mirror and saying things. Like, I think that stuff is great. Like, at a certain point, you're going to hit a wall, and I don't think it's going to work. And you're going to have to really somehow reprogram your subconscious. And there are lots of ways to do that. I've mentioned a whole bunch right now. But to me, that's the key. And I know, there's lots of different ways. Like I said, you can hypnotherapy, lots of different ways. And I know you've done some interesting ones as well that people might be interested in hearing about.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode. Yeah, sure. And I think to take a step back, it's also useful to understand that you can reprogram your brain, right? This idea of neuroplasticity. And some people think, oh, this is just how I am and that's how I'm going to be for the rest of my life. And that's simply not true. So I think the first thing you have to understand is that you can change some of these really deeply ingrained habits. And it might take a while to get there, but if you keep trying things, I think you can figure it out one way or the other.
Absolutely. And what you just said is sorry, but what you just said is really important, Hugh. And I want listeners to get this. What Hugh just said, that example that you gave, you said, I've always been this way or whatever. Like, I can't change. I've always been this way. That's a program in itself. Like, people need to realize that, right? Mm-hmm. That is a program. So you are running on that software. When you catch yourself, a really good way is self-talk. Like when we all talk to ourselves, or I hope we all do. I hope I'm not the only one. You can catch your self-programs. They kind of bubble up a bit in those self-talk moments. That's a really good way to figure out, okay, this is what software I'm running on, sort of thing, right? So I think I just want to highlight for everyone listening or watching or whatever, that what Hugh just said, oh, you can't change your brain or whatever. Oh, I've always done this with. You're right. All the research is so clear. It is so clear. Like, I don't want to get too personal, but my wife works with people with brain injuries, right? Like really severe stuff. And it's amazing how you can rewire the brain so that it goes around those areas that are broken, or, people have strokes and that part goes dead. Or there's a study about the nuns or whatever. They lived like in a monastery and they had like the brains, when they scanned their brains, a lot of them had Alzheimer-like brains. Like they were indistinguishable from Alzheimer's with all the plaque and stuff, and yet they had no symptoms. And they put it out to the fact that they were like, meditating, praying a lot, and doing lots of reading. And what happened was the neurons grew around the plaque areas. So they were actually normal in appearance and normal in behavior, even though their brains should say that they'd be, deep in the throes of Alzheimer's. So I just want to, point that out, that what Hugh is saying is really important.
Yeah. And I've seen that too. I've read about it in some other books where people were missing part of their brains and they were functioning pretty normally. So yeah, it's cool. For the stuff I tried some of the hypnosis stuff. I've tried, what else? I've tried energy healing. That was actually really, really useful. To your point where you said that there's a deeper cause for a lot of these problems. I think some of this stuff, it can be solved by just some affirmations and I'm good enough, I'm smart enough, people like me, whatever. But like also you have to look at what is the cause. And I found that for most people, the cause is really trauma, some sort of trauma. That could be your childhood. That could be, something, maybe bad marriage, whatever it is, like, or past lives, like you mentioned, if you believe in that kind of thing. If you can pinpoint that trauma and really address that, I believe that's the key to starting to heal and starting to get past some of these roadblocks that you're trying to solve.
Yeah, absolutely. That's the key, is that, like, what's going on here? Okay. Mm-hmm. What's going on? What's happening? How do I dig into it, find out, where this comes from, trauma or whatever, like there's some root cause to it. And then now that we've fished it out, now, like, what's the way forward? I think those three things, like, and, not everyone wants energy healing. Not everyone wants hypnosis. Like, there's certain things that won't, you're not going to jive with you. But that's a good list to start with right there. The neurophone that I mentioned, I didn't really mention much about it. What that kind of does is that sort of is a way to, like, in a way, it's like hypnosis. It's a way to put data into your head, right? So there's anecdotes about people learning how to speak languages by using the neurophone. So you would plug in like the way it works, you put these things on your head, right? Like almost looks like like an EEG or whatever. Like you put these little sticky tabby things on your head, and then you could plug into it, like, let's say you want to learn Romanian, right? You would plug in like a Romanian MP3 class, like, and then it actually goes into your head. It physically, and if you're quiet enough, sometimes you can hear it. It depends on the person. Sometimes you can't hear it, but it's actually going in there. And so that's how you would, you know what I'm saying? Like you could use a hypnosis track, or you could use subliminals, or you could write your own affirmations and record them and put that in with the neurophone. So, and your brain's a little bit weird when it's on the it's sort of activated. So, yeah. I mean, some people, they feel like they get shocked. Like I've given it to people and they're like, they they're like, get that off me, So everyone has kind of a different reaction, but,
I bought one on your recommendation, and I got the older one because you can get that one brand new. And I've been using it, and wow, like when you put it on, like I'm like in the zone, just really focused because of the alpha state, right, that it puts you in. And
it's awesome.
Yeah, so I would recommend giving it a try if people are interested.
Yeah, we'll put it in the show notes so you guys can check it out. Cool.
Yeah. Okay, cool. I think that's a good list for people to start with. So thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice. Just being curious about the losers. Why did it lose? Was there something I could have done better?
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh. Sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, there's this, I don't know if you want to call it a misconception in trading, but some people believe that you have to beat your emotions in order to succeed in trading. So what do you think about that?
I don't necessarily agree with that. I think what's happening is people are confusing emotions with breaking your rules and trading on the basis of your emotions. So I think that's true. So there's the idea that you should take emotions out of trading. I don't agree with that, because I think it's nice to, you can feel good when when things are going well, and it's okay to feel bad when things aren't going well. That's part of life, man. I mean, that's, it's okay to be fearful when you're in a situation. I remember my wife was telling me she went into the jungle in, I can't remember if it was Uganda or somewhere. Anyway, she was on this grand tour of Africa, and they were going through the forest or whatever, and then they come up on the silverback gorilla, right? Ooh, okay. And the silverback gorilla was standing right in front of him. He's like, "Ooh," and he's like bumping his chest, and all this stuff, and like, showing that this is his territory and kind of back off, you humans. And she said, it was amazing. Like she never, like, whenever you hear her tell the stories, and she tells it, right? And I've heard it many times, but she never says, I was scared that this gorilla was going to do something. Although I'm sure that everyone there felt a level of fear. Maybe the tour guide didn't feel the level of fear that everyone else. You know what I mean? And so that's kind of a thing that stuck with me. There was a famous trial attorney named Jerry Spence. He's written several books. I'll put them in the show notes for people. What he was talking about, and his books are more about how he never lost a trial. He was a criminal defense attorney, and he never lost a trial, right? Yeah. And he talks about, in the book, he talks about fear and how when we have fear, we know we're alive. Like that's such a core thing of being alive, is feeling fear. And what is fear? Fear is just like, you're not sure what's going to happen. You're standing in front of this gorilla, and he's thumping his chest, and he's trying to look all tough and stuff. And you kind of just stumbled on this, or you're, like, I can imagine the same thing would happen if you stumble upon a bear in the woods, or for me, if I'm surfing and the waves kind of get bigger than I'm comfortable with, or whatever. Like, there's always those things, and in trading, it's like, wow, I've had 5 losing trades this week. Am I really going to take another one? And that's all part of being alive. So I think you need to disentangle whether or not your emotions are causing you to stop trading your rules versus are you just feeling emotions because of the normal ups and downs of your equity curve? So that's, to me, that's how I see it. So I don't know, what do you think about that?
Yeah, no, I totally agree. I think that I don't think you can actually totally remove emotions from trading. Like, even if you have an automated system, you're going to, have your ups and downs because the system's working, system's not working. And I think like you say, it's part of being human. So you might as well enjoy the good part of it with the bad, as long as you don't swing too far in one direction, right? Yeah, I think that you need to maybe control them a little bit more, but not necessarily eliminate them altogether, because that's impossible.
Yeah, that's kind of the default. It's sort of like the 2% rule where they say, always risk 2%. Well, some strategies you risk 2%, you're going to go broke, right?
Yeah. Yeah.
Like Matthew in London, he has an 8% win rate. If he risks 2%, he will go broke. He will lose all of his money. There's no doubt, because he's beyond the optimal F point. That anyway. So yeah. So I'm with you. I think it's kind of like a mind trick too. If traders listening to this, if you get to that point where you can be like, especially if you have a low win rate strategy, if you can kind of trick yourself into thinking after you've had lots of losing trades in a row, hey, this is really exciting. Like, I know I'm fearful, but that's because that's what I get paid for as a trader. I get paid to take risks where other people won't. There are people who are punching in every day. They're doing their time and they're getting the same paycheck every week or every month or whatever it is, every fortnight, as they say here in Australia, every 2 weeks, right? Yeah. So, and you're not doing that. You're a trader. Maybe you have another job on the side or whatever, but that's cool. But what's cool about what you're doing is you're embracing fear. And you're saying, look, I understand. I get paid for this excitement, for this fear. You know what I mean? I don't know what's going to happen. I've had 5 losing trades in a row. I have a 37% win rate. Chances are I'm going to have another loss, right? I know I have a positive expectancy, and this is what I get paid for, this moment. And then pull the trigger, man. You know what I mean? Like, it's so cool. Like, one of my favorite quotes is, the Larry Williams story about how he won that trading contest.
Yeah.
And he was saying he was in a $900,000 drawdown when he won. Like, I think in November, December, at the end of the year, he actually lost. He would have won, but his record stands. You guys can look it up. I can link it up to the show notes if you guys want to check it out. But his record still stands. And I think his daughter has the second best result ever, which is pretty funny. Yeah. And she's an actress. Like, she's not even a trader, right? So Michelle Williams, yeah. So he was saying, hey, man, I'm a trader. He's like, look, I knew by August that I had wrapped up the contest. Like, he knew, or even by June, he knew that he was going to win it, right? Mm-hmm. And he could just kick back, not take any more trades. He's like, hey, man, I'm a trader. I'm going to keep taking my signals. You know what I mean? Like, it's awesome. Like, I think it's really cool that he's decided, this is what I'm going to do, because even though I could just say, oh, there, I won, game over, I kept going. And when he kept going, it even put him down from 1.9 million to 1.1 million. He lost that 900 grand or whatever it was the last month or month and a half, because he decided, hey, I'm going to trade. If I get a signal, I take it,
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
That's really, I think, if you can kind of mind trick yourself into remembering that you get paid to take risks, it's a different story,
Yeah, no, totally. The mind trick that I started using that helped a lot was just being curious about the losers. Why did it lose? Was there something I could have done better? And just being able to dig into that without any judgment or like fear of the loss or any regret of the loss either. And that really helped me out. But are there any other mind tricks that you know of that have helped you or other traders?
Well, the biggest one that I really like to promote for people is the execution journal. And I think for me, that was a game changer. Like the idea, and I'll explain what it is. So most traders, what we do is we go, oh, you got to keep good records. Oh, you got to, pull the emotions out or whatever. Like they say things like that. Or if I automate it, then the emotions are out. And like you said, that's all BS, right? Like you still turn on the robot. You still turn off the robot. Yeah. You still see drawdowns from the robot. You might be able to shirk the responsibility and say it's not me anymore, it's the robot that's doing it, but it's still, you can still intervene and say, holy crap, the markets are crazy. I'm going to turn off this robot. So automating trading does not take the emotions out. You still have to babysit your stuff, right? But the other thing is this execution journal for me was the biggest game changer. So instead of focusing on, which system did I take? What was the signal? When did I take it? How much did I make? Where was my stop? What was the R return and all that? And that's all great. And writing down, I felt really bad about taking the signal. It didn't look really good to me, but technically it was, so I took it. That sort of stuff is great, However, the best thing I've been able to do for my trading is have an execution journal where I actually rate my entry on a scale of 1 to 5 and rate my exit. What this does is it shifts my focus from why did I lose to am I following my strategy? And it's really weird to do that and to start rewarding yourself for having 7 losing trades in a row. But if you've performed your system according to its rules and you're getting 4.5, 5 out of 5 stars because you're doing a really good job, then you should be happy. And the only reason why you have drawdowns, the only reason why you have losing streaks, provided that your strategy actually makes money, of course, and presumably we tested that, we have a pretty good idea, we have a handle on that, it's because of bad luck. So all of a sudden you're letting go and you're saying, bad luck has given me a losing streak. I can see I'm executing according to my plan. So, you know what I mean? It's a different way to look at trading instead of, because it's so easy to change things up because you have a losing streak and go, oh, well, I see here if I would have added the stochastic, then I would have, missed out on, you know what I mean? Like, that's how you go down the slippery slope, man. Like, that's terrible, right? So, yeah.
Yeah, it's all about focusing on the process, right? Not necessarily the result, but the process.
That's a great way of putting it. Yeah, that's exactly right. Yeah, exactly what you said. Focus on the process. Focus on, am I executing? Not, am I losing money? Am I making money? Hey, man, look, one of the worst things that can happen to you as a trader is for you to do really well on the back of bad habits. That happened to me. My first week trading, right? My friend convinced me to move in with him, quit my job, take my trading stake. We put it in our account. Second night, we tripled my money, our account, right?
Oh, yeah.
And that was Tuesday or whatever. It was Tuesday. Yeah, Tuesday. And then by Friday, it was gone. Like, you know what I mean? Like, like that was my story. That was my introduction to Forex trading in 2000. Like, that was it. 20 years ago, I got into the game and it was all like bad habits, man, and not knowing what the heck I was doing. And so that was probably one of the worst things that could happen to me because I saw that you could make money doing it, but I didn't know how. Because I didn't, it was just dumb luck. Like, it was stupid. So execution is key. Focus on, like you say, it's really all about, are you doing the right things? Not the result. It's process. Like they say, keep chopping wood, that's the key.
Yeah. Cool. Awesome. Thanks, Walter.
Thank you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
If that 7-year-old can tell you that that's a trending chart. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, something I learned early on was that the crowd is usually wrong. There are a lot of books about this, and I think I was kind of wired to do that naturally. I'm kind of like go against the crowd or whatever. But I want to hear your thoughts on mass psychology of crowds, and how you use that in trading.
Yeah, so I think you're right, by the way, that your approach, I think a lot of people watching this, a lot of traders, I think, are contrarian by nature, and they're drawn to trading that way.
Yeah.
I do think, however, there are certain asset classes. So if you're a futures trader, if you're a currency trader, if you trade CFDs, which are illegal in the US, but like in England or Australia or New Zealand or whatever, you can trade them, you probably have some contrarian bent, probably. If you are investing in real estate, if you're investing in shares or stocks, there's a chance that you're the other side, that you're more of a social proof. So everyone should look up social proof. That's the cognitive bias you want to pay attention to when it comes to this. I saw somebody the other day, I think it was on Twitter, they posted a thing, and I don't know who she was. I think she was like some actress or something, or reality star. I literally don't know who she was, but apparently she was famous. And it was a video, this guy, she was talking about how like stocks were going to rally and stuff. Yeah. And she was clearly not, like, that's not her game, right? And the guy was like, that's it. S&P 500 has reached the top because so-and-so has claimed that it's going to go, further or whatever. And so he was making the contrarian point, which is what I like to do. And so one of the things you can do, and sometimes people fight me on this, but I would encourage you to look at the data. The easiest way to look at the data is to get an account at Xauusd. We can put the link in the show notes. And at Xauusd, you will have access to their tools. They have really cool tools there. And you can map out the open position ratio, which is just a fancy way of saying the percentage of traders long or short a currency pair. And you can map that against the actual price. And you can go back at least a year, probably even further. I think you can zoom out further. Anyway, and what you will notice is a very interesting phenomenon, which is as more and more traders sell the Euro USD, for example, selling euros, buying USD, as more and more traders as a percentage, like when that gets really high, like 70, 75, 80%, what you will notice is that the Euro USD will tend to go up. Don't shoot me for it. I'm just the messenger, right? I'm just telling you, this is a very valuable tool. Is it foolproof? No. Is it always that case? No. All I'm saying is that if you have two things, if you have a chart that you look at and it looks like it's trending, and you say, and you can bring over your 7-year-old and point to the chart and say, hey, put it on line chart. Is it going mostly up or mostly down, or is it just going up and down, up and down?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
If that 7-year-old can tell you that that's a trending chart and the open position ratios are flipped, so if the Euro USD is going up, making higher highs, higher lows, and the open position ratio shows you that 70, 75, 80% of the traders are selling the Euro USD, that's a pretty strong trend. Mm-hmm. And I would count on that trend breaking through resistance and to keep going higher. And of course, the opposite is true as well. Now, so what you want to do is find a good broker that has these. The best one I found is IG Markets. They have a big chunk of the retail market. These are retail traders. They're not funds. They're not pros. They're the people that we're trying to take money from, right? Our fellow retail traders, right? Those are the traders that you'll see at Xauusd, Saxo Bank, IG Markets. There's lots of them out there. I think even Daily FX or certain news websites. I don't know if FX Street does it. I don't think it's retail traders. I think it's their experts or something. They're buy. So that's what I like to use. And so that's a contrarian point of view. We don't move the market. We're very small. Retail traders are a very small percentage of the currency markets, and our broker is really participating in the real market, and we're sort of trading an image of it. I think using the crowd as a gauge for the strength of trend can be very valuable. And so that's one way to do it. Just look at the open position ratios and look up social proof, look up all the cognitive biases, see how those are. And social proof is the one that really, which is basically this idea, if it works for everyone else, it should work for me. If my uncle keeps flipping double wide trailers in Alabama, I can flip double wide trailers in Alabama or whatever, my friend keeps buying Apple and Tesla stock, I should do the same thing, sort of thing. That's social proof. And so that's what makes a trend happen, and that's what makes a bubble happen. And that's what sooner or later there's no more there's no more fuel, right? If everyone's flipping double wide trailers in Alabama, pretty soon there's no one left, right? There's no more buyers. Everyone's, so you just have to be aware of that. And so that's one thing I would encourage you to look at. It's an empirical question, which is, do open position ratios tend to be inversely correlated with the trend, the movement of the market? And the answer is a clear yes. And like I said, don't take my word for it. Have a look yourself. So yeah.
I've tried looking at the commitment of traders in the futures market. That really didn't work for me. Have you looked at that?
Yeah, that's interesting. I was actually hoping you'd bring that up. For me, the problem is it didn't come out. I think it comes out weekly.
Yeah.
Last I checked, it was weekly. So what Hugh's talking about is different. That's the pros, right? And that's futures. We're in spot retail Forex. It's a little bit of a different market, right? But I think that could be useful if you were like long-term position trading, maybe like, weekly charts or something, or maybe some sort of daily. I haven't been able to make that work either. I have to admit, though, I didn't have high hopes for it because it didn't give me enough data. If I go to IG markets, every 10 minutes, they're going to refresh the open position ratios. If I go to Xauusd, every 15 minutes, they're going to refresh the data. So it's a little bit better data, you know what I mean?
Yeah. Otherwise, the COT is just too lagging.
Yeah, exactly. Yeah.
Okay, cool. Thanks, Walter.
Thank you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
I'm really big on going home different ways. So where I live, I can walk a lot and just walk to the shops or whatever. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, what do you think about doing things a little bit differently during the day, like brushing your teeth with your other hand, stuff like that, in order to get your brain going?
Yeah, I think that's good. I think in some ways, like, traders can do that too. Like, if you're used to trading the daily charts, what if you started demoing on the 5-minute, just to, you know what I mean, exercise different muscles and things like that? I think in some ways, the theory of the neurophone, or the neurophone that we talked about before in another episode, you guys can go back and find that. We can put that in the show notes. That's meant to kind of activate more of a whole brain, sort of thing. And they say that women have a much, like their corpus callosum between the two hemispheres, they're actually, they have a stronger one. So that's why they often are better at verbally speaking than we men are. And so the neurophone is meant to sort of activate the whole brain and in a way kind of help with that, which is, I think, is what's happening. Like, if you tie your right hand behind and you just use your left hand for the whole day to brush your teeth and, make your lunch and whatever, that's kind of the same idea. As you're kind of just becoming a little bit more. I know it's just spatial, but it's like, it's a way of becoming more whole-brained. And, we really do have a lot of flexibility. We know about neuroplasticity and people who get horrible brain injuries. And then the area of the brain, for example, that is supposed to make your legs move or whatever, that's eliminated. Eventually, your brain will get to the point where you can, start walking again or whatever. Like, those sorts of things happen. It's easier when it happens when you're younger, obviously. Mm-hmm. But those sorts of things are possible. So I do think there is something to that. I think also, just looking back on my life, the best times I've had in terms of success and achievements have been when I've stretched, try to do something a little bit harder than, a little bit more uncomfortable. Like, being uncomfortable is when I find a lot of growth comes. So that's something that I think people might want to think about. And that, in a way, what you're talking about is that, isn't it? Like, it's a small little way to, like, I'm really big on going home different ways. So where I live, I can walk a lot and just walk to the shops or whatever. So I like to, like, not be a habit and, like, always walk the same way. And you know what I mean? Like, go through different neighborhoods or whatever and take a different path and just stuff like that, because otherwise you end up on autopilot, don't you? Like, you just do the same thing. Like, if you allow yourself, you will. So it's kind of good to mix it up a bit.
Yeah. If you look at the world just in a little different way, it'll help you see other things differently also, I think. Just open yourself up to new ideas or even new people, like walking home a different way, meet new people. Never know what can happen, right? Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Exactly, yeah. And you know what? That you bring up a good point, because that's a technique that you can use in, like, your trading to see yourself. I don't know if I don't think we've talked about this. Like, let's say, for example, this is what I did with myself. I used to always move my stop loss. So let's say you go, okay, I don't want to move my stop loss. In other words, I go, okay, I have 150 pips of risk. Trade goes 130 pips against me. So I go, okay, I'll move my stop loss to 170 pips because it's going to turn around now or whatever. That's bad news, right? Because you never really define your risk. But what you can do is you can see yourself doing that. Imagine you're at your trading station and you're like a fly on the wall, or like from God's point of view looking down at you, or maybe a cockroach on the floor looking up at you. So you see it from a different perspective, you see yourself doing that. And then eventually what you want to do is kind of eliminate that. See yourself stressing out because you keep moving your stop and taking really bad losses. And then you kind of see it in like black and white. So it's not so colorful. You can see it in a black and white movie. And then you can just kind of take that movie and just tear it up or burn it and watch the film melt.
Yeah.
And it's a way of letting go and saying, okay, that's not me anymore. You know, that's not my, you know, that I don't do that, right? That person that I saw in that movie is making a mistake, and that's not part of me anymore. It's just like a technique that some people use to eliminate old bad habits. Yeah.
No, I think that's super powerful. I mean, I think back to some of the things I've done in the past, and if I was up from the outside looking in, that would have been a pretty ridiculous like situation. Like I would have been laughing so hard, but being in the moment and being in the body, it was serious to me. Being a third party onlooker probably would have looked really ridiculous. Yeah,
it's a great way to see it, you know, seeing it from a different perspective. It's a great way to see it for the problems that are there and to let go of it. So yeah, it's a good technique for people who, you know, if you have like a habit, it can't be like a crazy terrible habit, you know, it's for the right kind of habit, it can definitely work.
Yeah, for sure. Cool. All right. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice. Yeah.
They went on to selling, you know, multi-level marketing vitamins or whatever, you know what I mean? Like, I don't know, like. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, what do you do to cultivate mental toughness, which is necessary for trading?
Yeah, I totally. So I call it resilience. There's a guy named Martin Seligman. I'll put the links in below. He's known as being one of the modern day fathers, not the original creator of positive psychology, but he talks a lot about resilience. I saw him at a talk. He came out here to Sydney a couple of years ago. And you kind of like can ask him a question if you bring your book up and have him sign it. He's got tons of books, but he talks about resilience. So what I would say is, what I would equate to mental toughness is resilience. And I think it's probably the reason why some traders keep going. If you keep going long enough, you're eventually going to figure it out. It's not that trading is difficult. It's just the actual mechanics of profitable trading aren't difficult. It's actually all the stuff around it, all the psychology and all the BS around it that makes
basically.
Yeah. Exactly. Yeah. It's against your nature. Exactly right. We have all these cognitive biases working against us. So So resilience, I think, is key. And so if you get into resilience, you can read Martin Seligman. There's other people who've written a lot about this. A big one is like, I'll give you an example. So what they talk about in the resilience research is catastrophic thinking. So I've had 2 weeks of losing trades. I'm down 9% of my account. And so I start to wonder, like, what's going on? Like, is my system broken? Have the markets changed? Am I going to lose all of my money? This is never going to work for me. How am I going to be able to pay my mortgage or whatever? Like, that's catastrophic thinking. It's just taking a little tiny thing and blowing it up out of proportion. Because the reality is, if I shift my focus and say, hang on, 2 weeks of losing trades, how many trades is that? 6. Okay. What are the probabilities that I'm going to have 6 losing trades according to my rule? Oh, well, it's actually 85%. Okay, so actually what I'm talking about here is something that's actually quite likely to happen, and that it's happened is not a big deal because it's predicted given the parameters of my system. So, you're just trying to shift the way of seeing it, and instead of allowing yourself to snowball and get really hyper negative. That's catastrophic thinking. So that's like one tool, right, for the resilience. The trader who wants to be resilient is to shift that catastrophic thinking into another. How can I state what I've just said? I've had 2 losing weeks. How can I state that in another way? Instead of saying I've had 2 losing weeks, I'm going to lose all my money, I'm never going to make it as a trader, I'm never going to be able to pay the mortgage or whatever. Instead, I can say, wait a minute, I've had 6 losing trades. Is that normal? And the answer is quite logically, yes, it is normal because I know the probability of that happening. So for me, that's how I view mental toughness, is sort of building up your resilience so that you're able to withstand those terrible moments that we're presented with as traders. That's really what we get paid for. Other people don't want to deal with these sorts of things, and we have to deal with them face on. So that's what we have to do. Yeah.
Mm-hmm. Yeah, for sure. Would you say that people who faced some sort of breakdown like that, like blowing out an account or several accounts, develop that quicker than people who are more risk averse and don't take a lot of risk or blow out an account early on? Do you think that they have less toughness or resilience just because of that? Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
That's a good question. I don't know. I think if you read like the Market Wizards and the New Market Wizards, almost to a trader, they all talk about how they blew up their account and they basically swore to never do it again.
Yeah.
Or they blew up their account and then their second and their third, and then they swore to never do it again, sort of thing. It's a tough question. I often wonder, like, are you better off just totally blowing up in the beginning or, getting on a lucky streak in the beginning? And I think that it's blowing up, but I'm not sure, I'm not sure. I think there are probably tons of traders that we never hear about who started trading, blew up their account, and then just never went back to trading.
Yeah.
They went on to selling, multi-level marketing vitamins or whatever, you know what I mean? Like, I don't know. Like, so yeah. I'm not sure. Like, or they went to go flipping houses or whatever the next thing is, So I really don't know. It is crazy though. When you read the interviews of traders, it is amazing how many traders have the same sort of basic story, which is, yo man, I started trading, things are going well, and then boom, I lost all my money and I swore to never do that again. So I decided that my risk would be blah, blah, blah. It's amazing. It really is a common thread. Yeah.
Yeah. And I don't know if the people who didn't blow out would want to tell their story. I don't think they're the type of person who would tell the story, or maybe the people telling the story wouldn't think that's interesting. So they wouldn't write a book about them or interview them. Right. So maybe it's just some sort of like filtering bias or something.
Yeah. And you bring up a good point, because I would argue that there are some traders that just want to tell stories.
Yeah.
They don't want to make money. They just want to go, oh man, you wouldn't believe I was in that Euro trade, and then the interest rate came out and blah blah blah. That's what they get. Like Ed Sequoia says, everyone gets what they want from the markets. Some people get these stories that they get to tell. Like that's their thing.
War stories.
Yeah, exactly. War stories. That's exactly right. Yeah.
Okay, cool. Thanks, Walter.
Thank you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Yeah, and there are people that are really into this. I know Sinclair doesn't like information in this podcast. There are people that so get that off. That was my story. That was my understanding is the three things that you can definitely so that was probably the worst thing to go run. In my head, animals are on a reduced calorie intake. Keep chopping wood for years. Those people have to
And I think
you know, after like
all information in this
12 hours
podcast
or
is for
whatever,
educational
your immune
and
system,
informational
you got
purposes.
that
Only
12 hours,
is not trading or investment advice.
and all
Beginning
those
it
sorts
didn't
of
do
things
anything.
happen.
Just
They've known that
finally
for a
it
long
started
time, but it's
falling
only,
for
I
me.
think just
And
recently
so
with the
it's
resveratrol and
super
the
tempting
and
to
stuff,
do
and
that, but
most
I'm not going to do it.
what they're saying is they're
let the
under
telling
a
pass.
pass.
That's why I like to
Sirtuin,
automate telling
and the
That's a really good
Sirtuin
thing
paths
to
are
do
actually
for
the
people
ones
who
that
have
kind
this
of
problem.
All information in this podcast is for educational and informational purposes only.
Not
It's not
because
trading or investment
people
Try and
advice.
automate
automate
stuff
your
off,
exits,
don't they?
man.
Like they
That's
say,
a really
oh
cool
man,
way.
well, you know, if I'm
So,
going to
like,
live an
then all
extra
you have to
15
do is
years,
just
I don't want to
babysit
live,
the
you know, the
EA
last 15
and make
years
sure
of my
that
life
it
where I'm drooling on
gets you
myself
out,
and I'm in a
right? So
wheelchair or whatever.
that's
You know what I mean?
another
Like
one.
people,
Hyperbolic
but
discount.
that's not what we're
You know,
talking
I did
about.
the
Here.
thing.
We're
I know
talking about
you.
maintaining
We've
your
done
body
this
to a point where you
exercise
don't,
with
like that's
traders,
not you.
right?
You
And I
don't
think
have
you
to
were there,
walk with a
and,
frame and you don't have to
almost
have,
always,
you know, you
I
can't
go-
get out of your
I go, I have
chair or
two
whatever. Like
envelopes,
that's
right?
another thing actually
And we
that
did
I
with
learned from my
Caroline, and I
wife.
said,
Like she
and one of
rehabs
these
people and
envelopes
helps them
is
when they have like
whatever,
strokes and
50
things like that.
bucks,
And you know
and
what
it's
she
yours.
says?
Take it.
What's the
Okay,
best predictor
fine,
if someone,
right.
like
But
when they're
if you open
older,
it up,
if they're
you
going to
get the
be,
50 bucks,
you know,
right?
healthy or
Or
whatever,
100
or if
bucks,
they're
or
going to have
whatever it is,
problems,
I can't
is if
remember.
you can,
And then
you
I
can get out of
say,
the chair.
now I've got
Like
I've got
100 times.
another
So they call it
envelope
sit to
that you
stands,
can
right?
switch,
So you're in a chair
but
and you
this
stand up.
envelope has
If you can do
either
that
nothing
100
in it
times,
or
boom,
200
like
bucks. I can't remember
you're
which.
going to
I
be
don't
pretty,
know.
like
I
that's
don't
good.
remember.
Like you're in a good spot.
And then you they
But
offer
if
them the
you're
opportunity.
unable to do
And
that,
every
you know, that's a
single time
sign
I've
that
done
maybe,
people
you know,
do, they
you're
always
not
keep
as
the
fit as you want to
envelope. They
be
never
like, in your
do
later
this.
years.
The only
And
one
we're
that
talking
did
about
was
people
Caroline,
that are
and that's
older,
'cause
you know,
we
like in
kind
your
of convinced her that
60s,
she
70s,
should.
80s. You want to be able to do 100 sit to
That was,
stands.
and you were
Like
there
if
for
you
that.
can't do
Yeah,
those in
so-
your 50s,
so
then you're
that
definitely
was pretty funny because
trouble,
I'm
right?
telling you, every single time I've done it, and sometimes I put the extra
I think a lot of
money
it's
in
like
the
a
envelope, sometimes
mindset
I
too,
don't.
like
So it's not
what you
always
do
that
right
the
now to
extra money
maintain
is
your
in there,
body,
you
like
know?
this
So
type of
it's
stuff,
really,
just
you know,
how
it's
you
really
think about
interesting,
yourself.
'cause
Like
that's sort of-
if you think
that's
you're
the
old
best way I
already, then
know
you're
to
going to be
highlight this
old.
hyperbolic
And I've seen a lot of
thinking where
videos
it's like,
with like
it's
these old
worth
Chinese
more
dudes
in
or
your
these Japanese
hands
dudes, and they're doing
than the
like
potential
pull-ups, and
of
they're like
even more in
70
the
or whatever.
future. That's
So I think it
basically
is
it.
just
And that's
maintenance
why
and
trailing
kind of a
exits
mindset
are
also
so
too, right?
hard for
Totally,
us
man.
traders to follow is
you know,
because of
my
that
friend,
bias.
his dad
Yeah.
was a
Yeah,
judo
sure. Why do you
like
think that
black
is?
belt,
I mean,
and I
most
swear to
people are
you,
taught,
he
you
would
think,
go.
to-
I mean,
He
if
would
you
go to
like,
these
if you were going to take
tournaments
an
when he was
evolutionary
like
point of view,
60s
you
and
would
in
say,
his
okay,
70s, he would go to these
the
tournaments in
caveman
like
is
Las
cruising
Vegas and
through
stuff
the woods,
and
right?
kick guys'
He
ass
sees like
who are like in their 40s and 30s. I swear to you, dude. And like he was always like, you know, and you know what's funny?
When
When we were in high school,
walking, maybe there'll be like a pineapple.
when we were in high
He
school,
you know, he
so
likes
he had two
pineapples,
boys,
he's better,
right?
they
And
can
I,
feed
you know,
more
I
of
knew
his tribe or
the two
whatever.
boys, right?
You know what I mean? And so
So
it
their
makes
dad
sense
was
that you would take
totally
it while
into
you
martial
have
arts and
it.
stuff.
You know,
The
we
boys would
spent a
like
lot of time
try to
as
sneak home
hunter-gatherers,
at night, like
you
on
know,
the
just
weekends,
looking
so
for
they
food,
didn't wake up
right?
their parents
And once
because
we
they were out
found
partying
food,
or
we could
whatever in high
relax
school.
and all that. But
So
then,
they
you
tried
know,
to
the next
sneak
day you got to
home and,
find
like,
more
sneak
food. So
in
that's
through the
why,
back window
you
and
know,
stuff like
all
that.
you know,
And
all this
sometimes
intermittent
they would
fasting
like
thing
be
is all the
sneaking
rage.
in
People are
through
saying, well, that's
to
how
the
we've
back,
always eaten.
the
We
back
never,
window or
like,
whatever.
you know, when you're a hunter-gatherer,
and
you
they would
don't
come
eat on
down,
the dot
and
at
the next
noon,
thing they know,
lunch,
they're up
right?
against the
Like,
wall and they
it
got a
doesn't
hand on
happen
their
that
throat.
way, right?
Like,
You don't know when you're
their
going to run
dad's like,
into
dude,
another
what are you
rabbit
doing,
or
man? You're
a
scared. Like,
bushel
I
of
thought you were a
berries or
burglar or
so. Yeah,
something, you
I
know?
think
That's how
if you
their
were to
dad
take
was.
sort
It
of
was amazing. Like, and
socio-biological
that's
point
totally
of
how
view,
he
you would
was. You know, he
say,
was totally
well,
like
we
skiing
kind
and
of
stuff
learn
into
to
his
survive
70s,
by
doing all the
taking it
judo,
when
and it
we
was a
can,
mindset
sort of
thing. He's
thing,
like, hey
right?
man, like I don't want
And
to,
we
you know
would
what I mean?
apply
Like
that
it's
to
up to
money
you.
too, I
It's your
guess.
choice.
That's, you know,
Yeah,
but all
yeah.
the economic
My
theory stuff,
dad's been
like,
teaching
if
Aikido
people
forever,
have a
and he's
business
like
background and they go into
93, and
economic
he's
theory,
been teaching up
they
until
act
this
like
whole
people are
coronavirus
rational
thing, but
and
he still
like do
teaches
the
the Aikido
weighing and
class.
say, oh yeah, this
So,
is
That's
you know,
this, so
awesome.
you know,
stay
the chances
healthy
of
and
me
just
getting
stay active.
like,
And
that's all BS.
you
That's
probably
It's
amazing.
not. It's driven
Yeah,
by
that's
cognitive
amazing, man.
biases, as
So
you and I
do you
know,
do
because we're
Aikido?
faced with
Do you
these
know?
every day.
Do you know?
It's
I took
crazy,
2
man.
summers, but
Yeah,
it
it is
just
crazy.
wasn't
of my thing.
Right.
You have to kind of rewrite in trading, right?
Oh, that's
exactly.
cool.
Yeah. You rewrite your brain.
Yeah,
Exactly.
so
That's
true.
exactly it.
So true. Yeah, you can there's a guy. You guys, I'll put
all
the show
information in
notes
this
too. There's a guy
podcast is for
who
educational
actually,
and
I know this
informational
sounds
purposes
crazy, right?
only.
This is insane.
It's not
People
trading
say
or
it's
investment advice.
impossible, right? But this guy broke his back, like shattered it, completely shattered it, and he literally put it back together, like healed himself with his mind. And then he wrote a whole book about this stuff. So I'll put that in there in the show notes too, because people kind of overlook. They think, oh, I need a drug or I need a rehab thing or I need a tool or whatever. But really, your mind is a really powerful thing. And like you said,
I don't think anybody should trade. Like, what are you talking about? Like, what are you talking about? You're a trader. It's like, no. It's like, no, I don't.
hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. All right, so in the last episode, we talked about cognitive biases. So let's talk about negative biases. How does that affect us as traders, and where does that come from?
Negative biases. Well, I think for people, considering what can go wrong is adaptive. Who's going to survive, right? Is the person, like the mother who's so concerned about her child that she makes sure that, you know, every little thing, like you grow up in the rainforest and down in South America, you know, the mother's concerned about pythons, you know, getting